The S&P Global US Services PMI 56.8. 56.8, that is lower than the forecast of 58.5. Composite PMI 55.4, 55.4. And the US S&P PMI December final full report is now on the feed for all those interested.
Noting the S&P 500 currently up 1.05% on the session.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
So the Bank of England sells £725 million of bonds in auction and receives £1.19 billion in bids, and the APF gilt sale operation cover ratio was 1.65. At 10 a.m. Eastern Time, we get US factory orders month on month, forecast minus 0.4% on the prior 0.2%. US core durable goods revised, forecast 0.3% on the prior minus 0.1%, and US durable goods revised, forecast minus 0.4% on the prior minus 1.1%. At 10 a.m. Eastern Time, we get US factory orders month on month, forecast minus 0.4% on the prior 0.2%, with a range of 0.6% to minus 0.7%. US core durable goods revised, forecast 0.3% on the prior minus 0.1%, and US durable goods revised, forecast minus 0.4% on the prior minus 1.1%. One minute remaining. I'll lead with US factory orders month on month. Ten seconds. -0.4%, -0.4% as expected. Core durable goods revised is -0.2%, -0.2% lower than forecast, 0.3%. And US durable goods revised -1.2%, -1.2% lower than forecast, -0.4%.
Give me just a couple of seconds here. I'll be on with you guys in just a minute. Check 1, 2. That's really loud. Check 1, 2. Check 1, 2. Do. Vitamin D. Multivitamin. Ibuprofen for my old ass. We're having a coming to a we have how do I word this? We've got 2 daughters, right? And they're becoming young adults. And our oldest dog, thanks. That is cranking hot. Hold on 1 second here. So we have this dog. Here, hold on. Give me come on the show here. Break time. Be right back. Get rid of that. Old man. Welcome back, everybody. Hope you all had a wonderful holiday. Ours was good. I felt like I was in the holiday Olympics. We did like the Thanksgiving Olympics through New Year's. My youngest is sick today. She's been sick all weekend. Her first day back to school, she's home. So I guess the holidays did get to her. This past weekend, too, was we did like the past 3 or 4 days, we've done the decompress from the holidays. And we took our oldest out. We walk our dogs every morning, and we take them through this like trail system and stuff down through a river. And we're losing our oldest dog. and he's not. He's about 10 and a half. He's a border collie. He's 10 and a half. They live to be about 12 years old. Right, you should like feel good if you get 12 years out of a working dog like that. Purebred, got it from a real ranch, whole thing, right? This guy is like our family member. He's the of all the like we've had a litany of animals in our house too. Remember, we've got children, and we're in this stage of our children's lives where they've had all manner of animals, and they've met all manner of outcomes in their lives. We've done rabbits and chickens and a few fish that had made it, and a few fish that I think my youngest killed one once. Like too much food. They did the too much food thing, too much this. Like what kids do, right? But the one key point here is that some animals there's like a hierarchy in our family on animals. We do full military burial for the animals and all that kind of stuff as it is. But this one in particular, this is the number one animal. I don't know if there is a number one or number two, but he's like a family member, not to be taken lightly in our family. And he's like not recovering from walks. I have to build a ramp outside or something for him to get up and down. No stairs for this dog already. He's lucky to be alive too. He was stolen from us once, many moons ago. And the recovery and the medical care afterwards was stupid expensive. It's a great fucking dog. This is like our dog. He's a guardian. He's a border collie. He's fucking awesome. So he's dying. And we're going through that yesterday into this early morning and deciding what to do for him. Like what's his end of life plan. Went to the vet. Like some of the stuff for these dogs when they get older, it's as detrimental as whatever there's like a bad to a good. So some of the pain stuff destroys their livers and their kidneys. And then so you just want to limit what they're doing, I guess. Get another year and a half out of this dog. And our food is like, I cook food for this dog. This dog gets everything. It's like, it's treated like a king. But he's at that place where his mortality is becoming unavoidable as a discussion. What do we do with him? Does he get the full military burial in the backyard? I'm like, I'll build a casket. I told my family, like, I'll build a mahogany casket for this dog. They're like, no, Daddy, we want to cremate him and keep him in an urn and spread some of his ashes back in New Mexico and stuff like that. So they're unwilling to do that. This animal's different. So his mortality is coming into focus. We've had him like recover, take a while to recover and stuff like that, but never where he didn't recover quickly. So like now we take him for a walk, let him off the leash to run, and he's not recovering. So when that happens, you start to think, we got to limit his what he's running through. How much is he? And this isn't a lot of running. This is like 20 minutes, 30 minutes, some rough terrain and stuff. But, we're at that point where his mortality, we can see, could degrade at any point. And it's kind of sad. It's more than a little sad. But confronting it is the brutal part. Because you have to they're like, he's still fine. He recovered. Look, 2 days later, he's feeling much better. Or later in the afternoon, you give him some meat, and he's recovered by in a day. And we did like some other. We had him on some medication, but the medication you have to give him just a tiny bit of. It helps him with the pain, but at the same time, he could injure himself even more. We don't do the steroids and stuff like that. And even this medication is not cheap. It's expensive. It's like an ibuprofen for dogs, which is still dangerous for them anyways. It's like all pros and cons as they get into this age group. At any rate, this dog means the world to us. So that's what I'm dealing with this morning is what are we going to do? Where are we at? Let's start making plans, that kind of stuff. And the ability to be able to shift gears as it unfolds and what is it going to do to my kids? Kids are going to be devastated. This dog has never left their side, ever. This dog is like people cross the street when he's there. Like, yeah, well, Detroiters have a non-affinity for dogs, and our dog's very well trained. But you like see the dog next to the kids, and they're like, "I'm going to cross the street instead of be next to those girls with that fucking dog right there," which has been a godsend, right? So at any rate, that's what we're dealing with this morning. Welcome back, by the way. If I haven't seen you, you're coming back from vacation. Welcome back to the stock market. We know that last week was low volume. We know that everybody went on vacation December 18th. We know that people are going to re-enter the stock market this week. And price is returning to the scene of the crime for the second time in as many weeks. We're trading right now 598.38. Like nothing ever happened, right? So you have the volatility of December, and then I've seen people harp on we haven't had a holiday rally. We had one holiday rally, right, already in November and early December. We expected a second one for the first of the year. Very unusual that doesn't happen. Holiday rallies happen about 76% of the time. So not having one is unusual. And we didn't have one last year. So that makes it even more unusual, right? This is a very low occurrence. We don't get this portion of the holiday rally. Now we did return to the scene of the crime-ish again today. So we'll take a look this morning as to what to expect from here forward. Watch out for a sell signal around 10:30 this morning. I'll start you with that right away. We are trying to hammer out support right where we are. We'll talk about that this morning too. We're trying to hammer out some support to get up and attack that all-time high, prior high that we had in the past. So there's a bunch of stuff to look at here. You got people getting back from vacation. They're all coming back into town, right? Come back into New York, wherever, Chicago, Florida, wherever it is you guys go. And we're not all of you, but some of you. And they're getting back into the swing of things, right? Do we get a holiday rally? Does it happen this week, today, tomorrow, whatever, right? Is there going to be no holiday rally? Does the market extend out into late January, late February, or even later? Due to no holiday rally. When we didn't get one last year, I think we kept ramping, right? I think we ramped like into March or something. It was like a delayed holiday rally. Now, we didn't get the 3 in a row, though, did we? So my trade, I extended to January 17th. When I put the second trade on, I was going to hem in the date, but I made it later in case we did not get the holiday rally. That trade's still on. I haven't taken that trade off. And even though I have us going down here to the downside, we'll talk about that in a minute too. But I still have that trade on. I don't know if they're going to print that. It was greenish, like 602 and above. I'm green, not significantly, and nowhere near where I want to get paid. 602.45 is where I'm green, but and anything above there, I start cranking money. So, I don't know if they do it. We'll save that until after the 17th because I'm assuming there's others on that trade as well. It's an OPEX trade for January. Now, I also figured that if I was pushed out into January to close these calls, that do I instigate a second or a third trade besides that trade? So this like third holiday trade is right now coming back into the market. So we have a ton to look at, or we need to look at this morning. We also have a bunch of stuff going on in Canada. You can see the Canadian dollar is mooning, sends money into the U.S. trade, of course. Well, we're going to talk about a bunch of stuff this morning. So let's look at.
Stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer.
We got a bunch of economic news this week too.
Worth of our service.
We got some stuff going on tomorrow. We'll talk about. We'll start at the beginning. So, for the economic calendar for this week, maybe I can just write this in the background as I go over it. Hang tight here, guys. Maybe I'll take a break and I'll write this out afterwards. Okay, so tomorrow we've got ISM Services PMI. Services has been running this country, so it should be good. Jolts, though, is a typical bear trade. That's the job openings data. Both of those data points come out tomorrow at 10 a.m. Those are crucial data points. Then we've got the FOMC meeting minutes on Wednesday at 2 p.m. So your main things to be watching are the 10 a.m. reports tomorrow, FOMC minutes on Wednesday at 2 p.m. From there, we have more major data on Friday. We get non-farm payroll, unemployment rate, and then the Michigan consumer sentiment. Also note that the stock market is closed, I believe, on Thursday the 9th. So we have a shortened week. We have some critical major data coming in. The minutes data, of course, that conversation should go under the microscope, as we're having a lot of verbiage changes from the FOMC. And also, we got kind of set up the last FOMC, right? In the presser, he had reporters given loaded questions prior to the presser, pointed questions, and he said, oh, look, I happen to have this data here, wink, wink, to answer that question. So we want to see what that discussion is. Does that discussion mirror more of the 1990s? Or does that discussion lead towards let's wrap up this operation and begin a new operation in 2025, right? Two different, or maybe not, two different outcomes, I guess, in the minutes. So we'll be looking closely at that on Wednesday and the posture of the Fed moving forward into 2025. I did see some news this morning. People are claiming that the market is squeezing due to tariffs not being as bad, or some Trump stuff with tariffs and all that kind of stuff. And Trump saying he's still going to do the tariffs and all that. We'll talk about that if we have some time to get around to it. At any rate, that's your big news for this week. There's some other stuff going on. We've got bill and bond auctions this week. We've got some other key data coming out, but I don't think that's what people are looking at. People are looking at jolts, services, and not even so much services. Probably jolts will be the bigger of the two issues, and then the minutes, and then of course Friday. Friday, everybody gets out of the pool news. Friday morning with non-farms and the unemployment rate. Okay, so we've got the economic news calendar out of the way. We're gonna now this is kind of interesting. Pravorsky last week was saying doom, 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 sideways maybe. This morning, Pravorsky coming out and saying, we might get a little bit of a squeeze this morning, but then back to sideways. He's sticking with that. I'm still in the view that we are in a choppy range. That said, the market participants coming back into the new year with fresh capital to deploy, there risks a bit of a squeeze. Now, remember, Pravorsky is kind of a bear. This guy's not a bull in any way, shape, or form. But he is conceding that point this morning of new energy coming into the market, which I thought was kind of funny. There's new money coming back into the market. We're gonna have a quick squeeze, and then we'll call the top once more in the stock market. Now, as we break higher into 1030 here, be careful of a sell signal as we come up into this time frame. The sell siders like to come in. They'll take a jab or two at this as we break higher. We got 11 a.m. here, and they're not always successful, but you'll see them try to come in and sell this down, try to come in and sell this down kind of stuff. We continue to squeeze higher right now. I did draw this out for you this morning to give you a path. So I'm hoping that you saw that dotted line going up. Let me see what we got here. Let's take a look at, let's start with Gamma this morning. What do we got going on here? Let's take a look at Gamma. Okay. That's the old dragon head, right? The old golden dragon. This fluffy tail back here. Got a leg. Got the body. Question always becomes, is a back test going to happen? Is it successful to make the head for the squeeze to go higher? Or does it fail and we go down for the new low? Big question mark, right? They tried to sell this on Thursday, Friday, I believe. We came up here. I believe this was. Let me take a look at this really quick. Make sure I got the dates right here. Yeah, tried to sell it here on Friday at 11:30. Failed. Tried to sell it here as well, right here at this was like Thursday close. Squeezed it up. Said no, the way is higher. Right. Friday failed. Squeezed up into today, into this morning. We know where the sellers are. We know that they're somewhere up here, right? Know that they're about to try to come in, right? Push us sideways and then back down again. It's like a regular printer over here, right? 1, 2, 3, 4. Get the job done. Get the job done. Coming back up again. And the expectation from sell side is, don't worry, we're going to be there to sell you down. You can see right now, right at 10:30, they're attempting to sell it down too, right? You can see that at home on your charts. See them come in here, taking a shot at it. Bam. Hold on here. Oh, my phone is blowing up right now. What is this? Why am I getting so many? Okay. So we know they're going to come in above, try to sell us down. Now, there's a couple key points here that we have to look at on Gamma at least. Put Gamma becoming less important at the moment. We had forced hedging down below twice. So we are well hedged down to the downside here. It's good to see. And another note here would be whenever we backtest the hourly trigger or the daily trigger, you want to see a successful backtest, right? You don't see that successful backtest and you go down to the depths of hell, right? The way is lower. If we backtest here, is the way lower or not? You want to be paying very close attention to two things. The first one, of course, is this gap left behind, this hourly trigger that's racing higher right now. Does price get rolled? Come back up, and we're able to take out the all-time highs, or at least test the all-time high, which is right back here, and where key resistance is right here, 6,100, 610. This is not only resistance, but this is the call wall. So we can draw that in there. Make that yellow. Here is actual resistance down below. And what's fascinating is we're holding this resistance right here, trying to hold this. So let's look at a 1 minute for a minute here. See where we are in terms of we back tested this at 10:11. So let's look back on the trigger screen. Right there. Let's draw this in right here. I want to hold that right there. That's kind of it right here. We need to hold all this to go higher. This would also be this would be gamma. Right, gamma bar, I guess. Put that right there. Make that a little bit smaller. Move that over. Half-hour trigger, daily trigger, hourly trigger. Half-hour trigger is crossing already. Hourly trigger is swooping up. A lot of buyers down here. And if this holds, if this gamma bar holds, the door is, even though we're on an R3 and intraday basis, the door to 606 is open, believe it or not. The 607.03, that's the next gamma bar. So if we can stay up here and consolidate, it can be an easy argument made that we can trade up here. Though I always like the successful backtest. And I want to talk about this briefly here. The more squeezing we do, the less stable the market is. Personally, I like the idea of doing this. I personally like the idea of at least the backtest of the cross of the daily trigger. Be successful with it, then go up there and attack this for stability of the market. I don't want to see the squeeze higher and then the fail on the daily and the hourly, and we have lots of volatility this week, right? And I also like the idea of this back test on the hourly half-hour cross of the daily trigger to know if we're going to go higher or not, or if it's all for not, and the weight is lower. Because right now we've got the market calling for one more leg down. And that's the concern here, is that if we make that next low, if we get rejected here and we begin to head lower, like the rejection without a successful backtest. So let's say we roll down, let's say, right? We get below the hourly trigger and make a new low. If that is the case, you're looking for significant lows. You're looking for, a minimum of 81.72 and quite possibly and easily 62 and 61. Way over here. Significant downside move. There would be your 1 and 2. 1, 2, 3, I should say. Right? You would, if you sell down and break below this crosshair, get the new low. Without a doubt, they're going to be trying to hit that 76 and probably wick you down to the 64 before we start trading higher. So be conscious of that as we are approaching these highs here. Don't be getting too crazy. And to be honest with you, for myself, what I would like to see is that not to happen, of course. I want to see, though, the pullback in cash market, successful defense of this hourly trigger, half-hour cross of the daily trigger, and then we begin to make our way higher. And I would say at that point, correction is over, or whatever this pullback correction bullshit is, this holiday, we're out of here, going on vacation, situation normal, we're back to the regular market stuff. Okay. What do we got to do here? So we're only got a 30-minute basis. Let's take a look at this. See what we got going on here. Let's check out some velocity here. Hourly is a little overdone here, but it can extend longer. We haven't had a close on a high yet to get back into positive gamma on a daily basis, but it is looking like we may get that close. That's all good to see. This is very good to see, very positive gamma. We have examples of that in the past. We got one right here. Flip down, up, down, down, up, right? And so we can find an even better example here. A little bit of this action right here. This looks a little bit better. You come up here, you do this big boss move. And a little bit more, a little bit closer. And we're kind of right here, right? Remember we talked about June, July, and April, and how we made the bloodbath down in April late, or excuse me, not April, August, September. This time we bloodbath first, came back up, puttered around. Do we get that last leg down? I don't know. And let's look as well as what happened here. All right, come back down. Try to make the scene of the crime. Told no. Try it again. No, that's right. 1, 2, and 3. Bloodbath, right? And now we're back over here again. We got our 1, right? 2, and we don't want to see that 3 doing. A 3 would be a doozy. Now, this first drop right here, we lost more in one day than we did in that July run up, August. In single stocks, not the index, but in single stocks. We lost a ton of ground. Now, single stocks came back last week while banks were long inverse ETFs for the S&P 500. So we'll pay close attention here and see what happens. So pay close attention to this this hourly trigger, half-hour trigger, this whole cluster down here. This needs to hold for bulls. If you don't, it's going to be doom. It's going to be very rough. The thesis is that it would be very rough to the downside. They took their stab at 1030 to try to sell, didn't work. Gamma bar is holding right now. So we'll push this over here, see if they can continue on to the upside. One quick second here. Also, we're going to look at VIX 9-day. Go show you this really quick. Bottom right-hand screen. VIX 9-day holding up kind of well. We're not in any kind of like crash the stock market or anything. Like, hey, I took all of our VIX 9-day and now we're murdering the VIX. We're trading $10. You know, market's going to blast down. Plenty of room here for market to go higher. That's good to see. See where these buyers have been. Been somewhere down in here, right? Trying to get a little more excited. We still have more room to run down. We're trading 14.36. Could trade all the way down to $12 and still go higher here on SPY. All looks good. It's bullish, by the way. No real danger or doom. Head on VIX 9-day. Excuse me. Only one quick second here. We'll take this one right here. Triggers, hot stocks. We do triggers maybe. We're going to do one quick second here. Take a look at the Dix. Dix getting shanked. Good to see. Dix staying on trend on the daily trigger. Caught a little bit of a bounce down here below. Let's look at Dix with a series of new lows on velocity. That's good to see. Let's look at TNX really quick. $4.63. Don't like seeing that. It's let's look at TNX. Lots of supply up here. Here. One quick second here. October 23, November 25. We do not want this to get comfortable up here. It's bullish our market. Once or if the yield becomes comfortable above 460, we're going to have I think we're going to have a problem over time. This is QQQ. It's a monthly time frame here. There's that low sweep. That's the doozy right there, huh? 477.29. Nobody wants to see that. Well, the Bears do. Nice cluster of buying down here. This is all good to see. Where real support is. You can give this up this daily here, no big deal. With this cluster down here, this is real nice support right here. You can lose all this and still be fine. Can't give up 504.60. Deal here with tech. This is your, if you wanted a gamma level here, it's 527.31. As long as you maintain above here, we can trade above to this upper target. 4-hour basis. Let's get rid of those pivots again. Just begging for a sweep lower, isn't it? A bunch of 1-hour support down here. It's all good to see. This is all good. Strong like bull in here. This looks great. This looks really, really good. 1-hour basis. Let's look at a 30-minute. Starting to get bulled up here in tech, right? I can start sustaining this stuff here. There's one right there. Let's see what happened there. Squeeze, 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 squeeze. Daily velo helps. Explosive moves to the upside. That looks good. I like it. 1-hour basis here.
US 10-year Treasury yields reach 4.644%, the highest since May.
It's all good to see. We're right where the place where they want to be, though, aren't we? Like right there. Look at that. Like right on it. And I'd really, if you're bullish like, well, I'd really like to see that. Then that giant pullback. There's your daily right there. I'd really like to see that and just that new high. It's okay. So if you're, this is QQQs. Personally, I would like to see Qs. This is on a 1 hour basis, so we can go down. You know, it can go down a little bit, but I'd still like to see that tick. Maybe back clean all this up down here. There's a couple things to clean up down there. No, they were these fucking bears. They want this whole fucking thing. They want all this shit. I'll be honest with you. I'd like to see it like end right here. Start going higher. And then you could take that out. Something like that. Make the new high. '17th coronation. The coronation's over here somewhere. Yeah, you got to watch what this is here. This is going to be crucial for bulls. Whatever this is, like, and this is the other thing too. I would like to see that. Even if we don't, and they start rolling this down, this is going to matter. Like this is going to set a path for us. It get nasty down there. Like down there's doom. Oh, that's an ugly ass looking skull and crossbones. Like a sad skull. This would make me feel better. This would point towards, boom, boom. Let's just get this fucking done and get out of here. If the sellers see like that new high, if they see the successful backtest, you're going to see, shorts will come off. Like danger for bears. If any of this stuff holds in here. Excuse me. So watch this Qs, by the way. SPX coming back down, hammering at a base still. This is SPX Gamma. QQQs. Let's take a look at IWM next. Wrong one. Triggers, IWM. God, look at this. Terrible. Trying to escape here. IWM. 1 month. Question is it done? This one's harder to read, and this is a giant reversal right here on a monthly basis. Pretty significant, right? Giant reversal candle. Let's look at this one together a little bit more closely. 30 minutes. Like that. A lot more room to run here on smalls. I wonder if smalls outperforms this year. Weekly looks okay. Not great, not bad. Daily looks good. Daily time frame velocity looks good. IWM's a head scratcher. Not quite a head scratcher, but let's look at this here. It's like a kiss of death here. A lot of buyers. See this like buyers on a monthly basis. Big buyers here. Big buyers. This is the instigation lower. I kind of like WM. A little bit of roll, taking a second shot at S&P 500 to send it down again. Did the 10:30 sell, they're going to do the 11 a.m. sell. Just revenge trade this. Do this in a week. So that we know this is where support is, right? This is like kind of like the Alamo right here. This is what it looks like bears are asking for. They're going to tell you that, right? We only want to come down one more time down here. Then you can have whatever, do whatever you want here. But you know how that goes, right? Get underneath this, and then boom, it's downtown. And they did this on the 18th too, right? Boom, boom, blast straight down. Fuck you, fuck you. Last few weeks down here. You also have some real nastiness above. This isn't good to see. This is that reversal tweezer candle telling you, fuck you, that's the top. A lot of work ahead for smalls. Gap down below. It's like velocity on smalls is telling a different story. Velocity on smalls is saying, oh, we're just getting started. Just waiting for all these M&As to come through and H2Bs and H1Bs to be fixed. deregulation, mid caps. There's an argument that mid caps will be strong this year. That's probably makes a portion of this bullishness and velo on S&P or small caps. Let's see what we got here. Go back to that one day. So what they're basically telling you, sellers are arguing that you can take this trade up here. The way is lower, close the gap. Then you can go up there and mess with that. I guess this is what the bears are saying. I never like that because the bears are always like, yeah, we're just gonna take a quick trip lower, bro. And then it's like this, fuck you. Right? And I'm like, fuck all that noise. I'm like, how about we break above, hit that daily trigger, and go up here and do this bullshit. There's the 17th. Then you can come back down here and mess with that. That's what I would like to see, something more like this. So let's redraw this one. You can have that, but I want to see this. And you can have that over there. We can talk about that later. Let's have a look at that too and see what that looks like. Something like that. We already hit that one. We don't owe shit over here, do we? No. We don't owe shit. Even if this can be considered distribution still for like that springtime low. I can see now the bearishness on smalls. Like even if you come up here and do all this, can still be in some kind of distribution. Tick, tick, tick. Way is down. Boom, there's the up. So I guess this kind of fits Pravorsky's summation. This is IWM. What else do we see in here? I haven't seen this 1 hour yet, have I? You just got to hold this here. This back test is going to matter. You get a lot of support in here, but this back test here in particular is going to matter. Get that right up there. This could be cleaner too. A lot of, like, this is it. This is support right here. I mean, this is like buy. Anything down here, buy. I don't know if you can get down here right now. If you did, no, that's pretty fucking big. At least on a monthly basis. I think we are range bound though. There is like this idea that I can see why they're saying we're not going any higher here. Or why Pravorsky's saying that. Let's go look at blues real quick. So you have 11 o'clock, right? We're going to bring this over now to 11:30. This is all holding and grinding. Gamma bar is holding up just fine. It's also, let's look at some other stuff here too. What is this pullback? Can we keep grinding higher and higher and higher and smashing out all of this stuff here? So I'll look at something else really quick. Give me a second here. Let's see where... Net gamma is 340, which is low. Trading 600 right now. That's where this bar is right here. We're slightly higher in SPX. SPX right now, 6014. So I make this larger for a minute. You guys see it. There we go. So we're like pounding up and above here. Try to take all that stuff out. Come back down. This is why there's not much here. There's like nothing. That's 580.90. This is 5,900. Right here. We talked about that yesterday, or on Friday. We talked about holding 5,900. Getting above this gamma here and attacking 6025, 6050. Currently top of the market, about 6100. You could make an argument that it's 6150 up here. I guess real hardcore bulls will tell you it's 6165 up here. But we are starting to break above and hold this right now. So we're right here. It's pretty good to see. Go back to, was that 100%? We go a little bit lower. All right, let's go a little bit lower. At the money volatility, SPX. Volatility expected to rise. Get this this data on Wednesday, Tuesday, Wednesday, Friday. Still elevated volatility for right now. That's not good. Not good to see. CTA positioning, S&P 500. This is actually good. So this is a S&P 500 CTA positioning. We're breaking below this little bit of support right here. You see that? But that also implies that CTAs are willing to become dip buyers soon. That's important. If we... there's two arguments. There could be two arguments here. They'd likely be triggered as buyers above 600. And they would also likely be buyers on any kind of successful pullback down here. So CTAs are about to become helpful to bulls. Vol control funds, kind of the same thing right now, right? Can be an argument made that they're here or even here. We're close to vol control becoming supportive in the market. So we're turning bullish on vol control. Not quite there yet, but close. COT asset manager net short long. This one's a little bit troubling. I don't know if you can see this. Does that help maybe? I don't know if you can see this over here, but this implies COTs can become, I don't know if you can see this here, but I guess you can't, but it's bottoming. It's off screen right now. I don't know why it's off screen, but can I bring that over maybe? Does that help at all? Come on here. There we go. You can see that. This is all good here for COTs to become buyers again. It's bullish, but there's a top to that bullishness before we get a bloodbath at some point. So COT is probably asking for the bloodbath or an eventual bloodbath. I don't know if that, but I don't know if that's the inauguration. You get like the Trump correction inauguration shit. I would stay on edge at least, or be tactfully bullish, because you don't want this to happen right here. You definitely don't want to see that happening over there, right? And no kind of doozies, no whammies like that. And this is kind of, we're not there yet, but we're gonna be. So I would say COTs are becoming bullish in the short term, but there is a top to that. It's like a late stage COT bullishness right now. If you want to know last time these COTs got out significantly, this was I'm having a hard time bringing this up right now. I don't know why. January 30th, 2018. May, oh, there we go. This doozy right here. Come on now. I just brought it up just a second ago. It's like February 2020. Nasty. This one right here was I'd like to call this like, there we go. June, July 2021. Nastiness, right? Not quite there yet, but almost there. In the short term, bullish. Medium term, I think we're all kind of expecting, not expecting it, but we're kind of expecting more volatility in 2025. Larger corrections in 2025. So I would say on highs, what can't get this to load right now? Come on now. Spin her up for me. Maybe if I can see if I can mute some of this for you here. Get where my hide that, hide this. Can I hide that? Hide that. So we're kind of just starting over here. Let me see. I move this over a little bit, maybe. Can I bring this up a little bit? There we go. This might help you guys out a little bit. This is seasonality charts aren't to be trusted, of course. So don't get crazy if seasonality doesn't match up exactly. Seasonality was pretty close last year, believe it or not. We were off by a little bit timing wise, but this white line right here is expecting more up, sideways, and then a giant move up into, this is Jan 27. Start of February, start selling it down. COTs seem to agree with this trade. I don't know how to get rid of this right now. This is kind of wonky. I don't know if you can see that right there, but COTs saying sideways and up, big up here, January, February. This is my fear too, is that so by Jan 17's like right here. So fuck your January 17th calls. We'll print all that shit in February. Then February it's telling you big down moves, and then a big move up here into this is the top on the 177th trading day. I'll get all this to you. You're gonna get a report with all of that, but climb. Big down move there. This is the one that concerns me here. I don't know if I trust that one. I don't trust this one either in summertime. Okay. So, as of right now, as long as this gamma bar here holds, way is higher. You got the first target here of 600.20, 600.39. I'd like to see that get tagged up here. I don't even care if we come back down to go higher. This just needs to hold. This is real support right here. As long as this holds, we'll continue to attack. Let's see if we can go up here and trade this by, let's call this like 12 o'clock, let's say. Beware of all this stuff down below. Hourly trigger is going to cross, sometime the next hourly trigger should cross one, two, three, next 3 hours. It's about like 1 o'clock. The daily or hourly trigger should begin crossing the daily trigger. Let's see if we can extend this just a little bit more. I'd actually like to go even higher, but I shouldn't say that. That's greed. Don't say that. Don't say go higher now, because the squeezing is bad. Like the more squeezing, the worse it is. We're in positive gamma right now, but you want like nice successful back tests of the hourly trigger. You want the hourly trigger crossing the daily trigger. You want everything set up like a nice meal, right? You don't want the shitty meal where it's cocaine, cook it up, make some crack cocaine. I don't know how you mainline cocaine, but I gotta cook it up and shoot it in your wrists. Some of you probably want that, but if you want stable market, you want to see nice grind higher, nice successful back tests, a little bit of pain on bulls for the FOMO at the heights. We continue higher. So let's see how this works itself out here this morning. Our seasonality calendar last year worked out pretty well. Our seasonality calendars work out fairly consistent. There's sometimes some timing and stuff, but last year's seasonality calendar was quite close. There is a natural seasonality to the markets. Sometimes they like to manipulate right in time or even price, but there's seasonality in bull and bear markets. People trade like that naturally. I don't know if that'll always be the case moving forward. The farther away we get from humans in control, I doubt it. But there is a seasonality to the market. It's well documented. Even if it's not exact, even bull markets, bear markets, doesn't matter. There's even seasonal dips to buy in a bear market. So they work out fairly well. This one's done pretty good. I'll try to I think I have a snapshot of last year. You can take a look at that and see what that looks like. But it was fairly consistent, generally speaking. There was a little bit of a stink last early spring that we continued to squeeze higher before we rolled. But when you take it over the course of a year, it was off by a smidge, an inch in that pullback. So I think patience is always the key. And we're going to be wrong, right? But it was still reasonably close to the expectation last year. There wasn't too much variance. And the overall outcome was still within the expectation. So it's not like we went, expect this and went there. I think we called 6,000 last year too, right? Beginning of November, December, October of last year, not 24, but 23. We said 6,000 would be the target. But we also said that this should be the top of the bull run. But that was with Kamala Harris winning the election too. Believe it or not, I know you don't want to believe this, but Kamala Harris, the expectation was that she would send us into a recession and not spend as much as Trump and actually work on the end of this whole COVID thing. And that's part of what not Trump, but Jerome Powell said, right? We have a new president. We don't know what impacts policy will have on the economy, on the business cycle, and on the stock market. Not that they're the only say-all, end-all, but Trump in particular likes to have a heavy hand, right, in the stock market in general. So we'll pay attention to this more closely. I'm with Wall Street on this. Trump won. He's not going to do what you want. If you're a true MAGA, OG MAGA, he's not going to do what you want until his last 2 years. They're going to run this thing hot and heavy if they can. So I think it's like right down like Getz and the Treasury pick and Bessent and all those guys. Like the Wall Street's all over this. Wall Street, oligarchs, money, and then of course we were satiating. It looks like the gray suits, the bond vigilantes at the same time. A little bit more greed, sir. Okay, I'll have a little bit more. We'll get serious here. We'll get the S&P Standard & Poor all over it by the time we get into springtime. We'll get that big knee-jerk reaction move down. You should start to see like Trump's first 100-day policy come out, some volatility in the markets, and you probably see like some kind of a stink, like some kind of like a stinkiness from Fitch or whatever. saying how we're a bunch of money grubbing whores. We're debasing and devaluing the U.S. yet again. A bunch of whore masters. Yeah. So you're going to run it till you break it again? God damn it. Same bullshit, different year, right? What else? So we got all that stuff done for this morning for the outlook on the week. We know what the expected news is this week. I'm going to read some stuff to you and just get you guys all up to speed here as people are coming back into the market. Make sure that everybody's kind of same page-ish. Start to tell a story. Start to go back and repeat and see this story as it unfolds, or if price goes against that story, how to deal with it. So let's go back. Let's take a quick peek through what some of the news is here. Now on Friday, Pravorsky got a little stinky. I'm going to read to you what he had to say last week. Pravorsky saying last week, longer dated rates have moved significantly since the Fed meeting and not in a healthy way. You don't want to see rates stay above 4.60. If you don't know that, I'm telling you. When they begin to like hang out for a little while, well, we have some concern. He's saying longer dated rates have moved significantly since Fed meeting, and not in a healthy way. The move reflects both real changes in backdrop and term premium. Market seems nervous potentially due to the supply anticipated in 2025, the sustained primary deficit, or the complexities of passing major legislative changes, as hinted by the near miss of a government shutdown. Now, that's the market. That's not Wall Street. Wall Street behind the scenes is very greedy right now, at least in the short term. There's in the background, if you read any of the stuff coming out of the Bloomberg terminals from multiple sources, the thesis here, basically, of JPM, GS, from most of these institutions is be long the market in 2025 cautiously. And if you wake up one morning and the market is blowing down 10, 15, 20, 30%, wouldn't be shocked. But you should also buy that dip. Their fear is not markets, bear market. Their fear is ride the lightning, have cash to deploy in 2025. Be there for that to happen. Now, when you say stuff like that, though, what happens? We melt up, don't we? It's just straight. We just go straight up. You never get your pullback. You'll come back in March and say, Cap, I didn't get, you told me to be afraid of a crash here. And what I'm telling you is, how about a bear ratio spread and be long? Cash in the sidelines. I should have deployed it all, Cap, Jan 1. I don't know. Like that kind of shit. But historically, Trump does bring volatility, doesn't he? So there is that juxtaposition to even in the face of, well, if we're going to start hedging heavily for a Trump crash, Trump correction. These guys are saying we're going up, but it's going to be 10% down, 15, 30, 20%. So everybody's slamming the fucking put buying button, call selling button. There's big high follow accounts on FinTwit calling tops since November. Big ones, 500,000 followers, 250,000 followers, 1 million followers. I've shown them to you guys, right? They're like literally calling tops. That's the top. That's the fucking top. That's the fucking top. They've done it 2 or 3 times now. And the craziest part is, if you have that, the insincerity of this is a problem for me. because not only do they get to call tops on you in November, I've shown you some of these high follow accounts, right? These guys are like big follow accounts. They're just like, that was the top. Then we got a new top. We got a new high after one guy called it in November. And these guys have like a million fucking followers and shit. The most insincere part of this is if they turn out to be right at some point now or in January, February, and you get a high and it rolls down significantly 10 or 15 or 20%, they're going to reinforce that call with you on public. It'll make its rounds everywhere, and the market will turn back up again. And everybody will forget that wasn't actually the top. And there's like a big difference between like the top bear market, volatility in markets as the market goes higher. There's a big differences in this stuff. Not entering a bear market, having a 10, 15, 20, even 30% downside move, that's significant. And there's some insincerity in this stuff too. And I think we're going to talk about that this morning. The importance of that. Give me a minute here and we'll talk about it right now. Let me see if I can talk about the insincerity of this, the importance of it. We get a lot of top callers, right? You know that. I know that. This is SPY. And there are times to get, there are times to become risk off, where the market goes risk off. Now, indexes are a little bit more resilient than individual stocks. The S&P 500 doesn't show you how devastating a market that rolls over can be to individual stocks. It's like the S&P 500 is a lot more resilient than individual issues. Now, saying that, there are times where you should go risk off in the marketplace. And when it's important to go risk off, more importantly, is and I want to show you this in particular. This is a significant downside move right here, right? This is back in that July, August bloodbath, right? Now, let's say you were long S&P 500, like you own the S&P 500, you own Qs, whatever that may be. We're up here, and some fucking schmuck tells you that's the top of the market. You sell at the worst time, and the market rebounds and goes higher. You'd be angry, wouldn't you? Right? Quite angry. Top call. This was back in March, February. Remember we had that top was called too, and went straight back up again. Now, what did not happen in these time periods were we did not see the daily trigger chase price. Listen to me closely here. You did not see. So let's make this red. So we had downside moves, right? Downside moves, right? Let me make this bigger so you can see it. You have downside moves here, and yet you did not see the cross of the daily trigger through the this is the weekly trigger. You did not see the daily trigger cross through the weekly trigger. And this implies that you deploy to buy dips, but you stay long, and this is not the top of the market. Had this daily trigger broken through the weekly trigger, here or here, and we bounced, whoop, you would stay risk off here for the roll down. You would actually stay, if you had the yellow line cross right here, you would stay reserved for that actually being a top and some significant lows to come in the future. So it's ingenuous to see that top calling. How do you call a top then, right? If I'm saying that is ingenuous, why? Well, because again, if you saw the cross right here, I would say, well, let's start talking about calling a top, going risk off. Then you would see the failure in here and the blast down. Let's go risk off now. And even then, you're likely going to be given a chance to get out in the future before we go down. You really want like market top callers to be calling the top like here. You would want them to see this, issue a warning to go risk off. Don't be buying anything and don't sell anything. Here's your chance to get out of the market, right? Not just like doom, 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 doom. Doom doesn't really help anybody out there. The investor class in any way, shape, or form. And I want to show you an example or a couple examples of when that does happen. And this was the top here in 2021 in December. We blasted down and we actually got the cross. This was the actual warning right here. So we blast down, right? Oh shit. We also have the cross of the daily trigger. And that would be your first warning right here, right? Went up, got the actual cross, down, boom. That might be the top of the market. Right? Now, so you're risk off. And if you're still long the market, you would be told to stay long until you're given a chance to get out or conditions improve. So you actually return to the scene of the crime right here, and you get out of your longs from back over here until conditions improve. So you see there's your first warning right there. We're not going to talk about velocity yet because velocity had already peaked out on monthly and weekly. And then did conditions improve? So you'd be looking for the new high and then a back test successfully and that daily trigger moving higher again. And you could re-enter the market, right? Boom, boom, conditions improve. You got a new high, successful back test. Hey, we're back on and running again. Ship's upright. We're good to go. But these crosses signal major market tops. And we went down and we traded pretty low down here, right? Pretty significant pullback down here, right? We entered a rough year, didn't we? And it got really nasty down here. And this happens every time we hit a top. Here's the one back here from COVID. See it? Here's the one back here from I believe this was the rate panic trade, October 2018. Cross, chance to get out. Another chance to get out. Bam, downside, right? Now, what about this one down here? We didn't get the cross, did we? Didn't get the cross yet, did we? Market traded higher, right? This is a good one to look at right here. We got the cross here. It tells you risk off, right? Don't be buying anything else. If the market comes back, exit. Everybody exit in an orderly fashion. Wham, back down again. Daily trigger began to make its way up, right? Still not long here, are you? But that's a good sign. New high. Comes back down, gives you ample opportunity to get long again. As situation normal, risk back on again, right? Every time. So let's look right now, see where we are in our market. Has the daily trigger crossed the weekly trigger? The answer is no. All right, so you got people calling tops back here on November 11th. I remember that top call. That was bullshit. Made a new high. Another tops were called again this week. I saw that last week. Everybody's calling tops again. Has price gone below the weekly trigger? No. Has the daily trigger crossed the weekly trigger? No. Could we trade all the way down here? Whoop. Get that new low. Has the daily trigger crossed? No. So even if we pull back once more, still not in a bearish stance overall in the market. We're not calling tops yet, are we? Not quite yet, right? And let's say we did get that. Let's say we get the cross. The daily trigger crosses down. Make that a little bit more orange, maybe. It's kind of like puke orange. That would be cause for concern, right? Start to get the rejection down here. Start this sort of stuff. You know, maybe we need to reevaluate. If we get a pull higher here, maybe we exit, right? Wait until conditions improve, right? To get long again in the market. But we're not there yet, are we? Then none of this has happened. And furthermore, terms of divergence in price, there's a couple things happening here. In velocity, we've had a series of lows on a quarterly basis. This actually goes farther back over here, but you get the gist. We're kind of squeezing right now, right? Bubble behavior. On a quarterly basis, on a monthly basis, we're squeezing. And you kind of need this weekly to come back up again, right? So that they all kind of align. You see how that aligns right there? Highs on a weekly basis, highs on a monthly basis, highs on a quarterly basis. And then as they start to come down, a divergence in price. Starts telling you, watch out. Wham. Wham, right? So we're not kind of there yet, are we? Not quite there yet. If anything, the danger is to squeeze higher before that roll comes into play. So we do not have a cross of the daily and weekly trigger. We do not have a divergence in higher time frame velocity. And yet we have people calling technical tops on the stonk market. Heading into 2025. COTs kind of are implying that same thing. Well, we'll run this up as long as we have to, but we are near top. But are we there yet? No. Have the triggers said we're there yet? Nope. Has velocity said we're there yet? Nope. The only consistent way I know through history to tell you if we're at a top or not is those two things. No gamma, nothing else. No technical shit, no Elliott wave, no fucking eraser gang, no fucking traditional charting. And not only that, I got to tell you something else too. You look at the politics here and you get Trump. Now, I know if you're MAGA, old G MAGA, you're like, he's here to save us, Cap. Wall Street disagrees with you, at least right now. And if they think that he's going to spend more money than Kamala Harris, I know that you don't believe that, or cheapen the dollar, or there's this like window. Remove the debt ceiling. Let's party. Let's get our tax breaks in. We'll tell everybody we're going to remove everybody. We're going to bring in more H-1Bs, blah, blah, blah. We're going to make cheaper for corporations. You start devaluing. What happens, right? That's why the stock market breaks out of trend. You guys know that? Some of you do and some of you don't. Top of that trend line's been going back to 1930, bro. Drew that box. I manipulated a chart. I drew a channel, and it's in the channel. It's never breaking out of the channel. We break out of that channel all the time. Do you know why? Because we cheapen the fucking dollar. We're doing it since 1978. Cheapen goods. I was with my wife and kids this past 2 weeks, and I'm trying to describe to my children. It's so glaring. When I was young, a child, when I was a young child, I didn't know that, like, or I knew that things were built better as time moved on. You'd like get a better version of something. That was true before I was born. In 1978, everything changed. You can see it in our stock market. You can just, and what happens is you're like, people are like, well, the stock market should crash then, right, Cap? And I'm like, no, you go to like Nigeria, you like, watch a third world country, right, who destroys their strength of their dollar, or it has you accept lesser quality of things. You see their stock markets just crank. They go moon. They go up. Vertical. Like my entire adult life, and how this conversation started was my daughters talking about plastic shoes. I don't know if they're Uggs or something, but they're going for like $200 or $300 a pair. And I was telling my daughters, I'm like, when I was a kid, if you tried to pass off plastic shoes to anyone for what's perceived as pretty high cost, right? Even today, $200-300 for a pair of plastic shoes, literal foam injected shoe. So there's been like a hoodwinking, two hoodwinks. There's the one where you're accepting cheaper goods, right? Well, it's not as going to be the same quality as it used to be, right? But then you're also lifting up inferior goods as quality. Woo! This is awesome. Yeezy put his name on it. He's got a garbage bag. It's $1,000, bro. That should be a good cat shit trade for the U.S. money. That money should come into the U.S. That's how you make money off it. High Canadian dollar, investments leave the country, come to the U.S. So the top might not be in, is the argument, or at least for this year, it might not be in. There could be a window of opportunity here, threading the needle of garbage to move the market, believe it or not, much higher. Or at least for the time being. Once Trump becomes lame duck, you can't get anything passed, can't make any deals with anybody in the House or whatever. His potency kind of leaves. Maybe then he can do something for OG MAGA. Come back and round up some, I don't know, some illegals or something and tariff away for a couple of years. But in the meantime, top is probably not in until we see those things. And it's ingenuous for you to be even reading that stuff. Top calling right now, because there's nothing else saying that we're at top. Nothing that I can see. Kavorsky saying, continuing on to say, there is also concern that the Fed believes the neutral rate needs to be structurally higher. Interest rates are now elevated, and the Fed has emphasized its focus on the inflation side of its mandate moving forward. U.S. equities remain expensive, he goes on to say, as they have been for some time. But since the December FOMC meeting, the market has struggled to reach new highs despite supportive seasonality. This stagnation is likely driven by the Fed and rising interest rates. Now we have on Wednesday the Fed meeting minutes coming out, right? And this should be a source of volatility in the market. The at-the-money SPX vol is expected to climb as the week continues. And I'm sure there's a bear out there somewhere today that's like, I'm going to sell the fuck out of this, and you're going to get bear Fed chair pow in the minutes. He goes on to say, if the rate market remains stable, equities could perform reasonably well. However, given the starting point for valuations, the recent movement in rates and the Fed's pivot, notice how he's already pivoted, right? Fed has pivoted. In Pravorsky's mind, it is challenging to defend equities returning to their highs, at least until inflation data confirms the Fed can prioritize growth again. That's odd. I've seen many moments in the market where inflation has risen and the stock market has risen. I've also seen moments in the markets where we get volatility, but higher prices in the stock market, even when the Fed raises rates. So what is Pravorsky saying here? The cautious tone to start 2025 remains, although the strong flow of funds makes it difficult to counter momentum. Locally, sentiment and positioning might allow for a bounce in risk assets, but respecting the signals from the bond market seems prudent. For now, expect market choppiness. For now, expect market choppiness. So his thesis is, we're going to trade up and we're going to trade down here, right? We're going to trade up here, maybe trade this 600, then we'll go down, we'll trade 78, 76, 81, something like that. Let's go back and look though, or let's go back and look at a few things here. We'll save this. We're going to take a break at some point, but we're going to go back and look at the 1990s because we had stable inflation generally over time, stable unemployment generally over time, which we do right now have that. You don't have velocity in inflation at the moment. You don't have velocity in unemployment at the moment. Employment. There's no velocity going on. We don't have any of the financial conditions in line with each other that we had in like '08 or 2000. I saw the credit card nightmare shit come out. But if you look at all of the data together and the healthiness of this consumer, they're healthy. I'll show you that if you want later today too. We don't have all of the same numbers coming in right now. So does it say we're going to get volatile? Probably. But can those volatile moments be bought? Probably. They're coming in again at 12 o'clock. They tried to sell us at 10:30, tried to sell us at 11, tried to sell us at 11:31. They're doing it again right now on the half. Move that over so you can see the red bar. Trump says the WAPO story of him pairing tariffs is wrong. Love it. GS saying hedge funds have net sold U.S. equities for the past 5 consecutive sessions at the fastest pace in over 7 months, reflecting a cautious approach to as the year end approaches. Macro products experienced the largest net selling in a year, driven by both long and short sales, while single stocks were modestly net sold. 7 of the 11 sectors were net sold during the week, with healthcare, financials, and industrials leading the declines. Conversely, tech, utilities, and materials saw modest net buying last week. Healthcare was net sold for a second consecutive week, primarily due to short sales, which have increased for 10 straight weeks in the sector. We already know about Trudeau quitting. That came out yesterday, I believe. He's been president now for what, 9 years or something? 9 or 10 years? Quite long. Longer than most. Time to go. Tides are changing. NVIDIA CEO Jensen Huang will deliver keynote address at CES tonight at 9:30 Eastern Time. Fed Reserve announces Michael Barr will step down from his position as the Fed Board Vice Chair for Supervision effective February 28th, but will continue to serve as a governor. Goldman's Rubner saying U.S. equity market has absorbed a ton of supply in late December between hedge funds, new shorting, pension funds rebalancing into bonds, volatility control and systematic strategies, vol spike and retail year end. Liquidity was also challenged. Note too here that retail becomes the biggest buyers in springtime or midwinter, like January, February. Liquidity was also challenged, and the gamma dynamic in the market quickly changed. As we walk into today, SPX futures scoreboard is up greater or less than 2%, and exposure remains short and underexposed locally to a rally from here. I would not call it FOMO, but more FOMU. Fear of materially underperforming benchmarks out of the 2025 gates. This is a short-term bullish tactical trading call as we move above key threshold levels in retail PWM, 401k, 529s start to do their thing. I will go bearish in February and look to reestablish hedges given any resets and volatility. Oh God. If you looked at that seasonality calendar earlier, here, I'll show this to you. I'll post this for you in the Discord. Rubner claiming that he'll return to short in February. And this is where that seasonality calendar will come into play. It's like a fucking vampire. Yes, I'll be back in February. I'll draw in where Rubner says he's coming in. Rubner's return. Rubner. Hold on here. Let me bring up the Discord. I just posted that seasonality calendar in the Discord market chat. It's got Rubner's quote. It's got Rubner's quote in it and his vampire shit. What else do we have here? Looks like they're giving up here. Cost of funding for levered long positioning keeps declining. Average is rare. SP 500 likes extremes from BCA research. Chart below shows distribution of S&P 500 total returns since 1926, only in about 4 out of 10 years. Let me read this here. Chart below shows the distribution of the S&P 500 total annual returns since 1926. Only in about 4 out of 10 years have returns been within the range that all sell-side firms are projecting for the next year. If we exclude outliers, that number goes down to 17%. In other words, almost all the major sell-side firms are herding around a range that has occurred in less than 1 out of 5 years. Jesus Christ. Yeah. So you got like sell-side saying range of 2025 sell-side forecasts So they've been wrong in a significant way on down and upside returns by a fair margin. So they're going to be really right or really fucking wrong. I'd be careful of this one if you've read this out there. This is coming from BGL, excuse me, or BBG. I can't get everybody's BG down. BGI, BGL, BBB, BGG, BGs. BBG. Now, momentum has become the dollar's major driver. The dollar is stronger across most of its largest trading partners. In early to mid-December, that was associated with the widening interest rate differentials. Fed was more hawkish at its December meeting, while most other central banks softened their tones. That's true, but the dollar momentum daily basis is slowing. It's starting to become negative. So that was the case, but this is old news being pushed as new news. The U.S. to hit debt ceiling between Jan 14 and 23rd. The U.S. Secretary Yellen will leave her position with the U.S. banging up against its debt ceiling and with special funding measures in place. Yellen warned late Friday that the debt ceiling will be achieved between January 14 and Jan 23. Inauguration day is, I believe, Jan 20th. Yeah, January 20th. The deal struck in 2023 suspended the ceiling until Jan 1, 2025. However, nothing's ever easy here, is it? Well, what about us suspending the debt ceiling until 2025? I thought it was party time. However, Yellen said that because of a January 2nd $54 billion redemption, U.S. outstanding debt will briefly decline before rising again in the middle of the month. From then on, the U.S. dollar is in special measures. Yellen didn't say how long she thought the Treasury would be able to get, but past experience suggests there's usually around 5 to 6 months before the drop dead date. One interesting feature is the likely rebuild of the Fed's RRP. Special measures mean that Treasury stops issuing new T-bills and starts writing down its TGA account or Treasury General account. The RRP has dropped to $237 billion from just over $1 trillion a year ago. Without new bills to buy, money market funds will likely turn again to RRP or for an alternative. They just don't like I think it's Wall Street that doesn't want to get rid of the the debt ceiling, the bond market. They're like, that's our regular juice, man. You can't take away our regular juice every June and July. Like, Fitch is freaking out. So we still have volatility associated with debt ceiling. Fuck you, America. Special measures, though, you normally get at least a few months out of it. 1 to 3 months out of special measures. What else do we have here? Let's see if we can see anything else. I save that image. Put that one up. This is SPX targets from Bloomberg. Year-end targets. What do we got? Who's on the high side of this? Oppenheimer is on the high side. Wells Fargo, 7,100, 7,000. Nobody's got the low side on this. The bigger institutions are a little bit lower. Oppenheimer, Wells Fargo, Deutsche Bank on the high side. Where is JPM? We got Goldman's at 6,500, JPM's at 6,500, Morgan Stanley's at 6,500, UBS 6,400. They're on the lower ends of returns for 2025 EPS. And remember, returns by sell side we're either way fucking wrong or they're way wrong. So you're either so JPM likely wrong. Oppenheimer, Wells Fargo, better chance of being right, or we crash the fucking stock market. Let me post this last little bit here to you from a different post. Post that there. That's from BBG. Looking what Trump is saying this morning. Congress certifies our great election victory today, a big moment in U.S. history or in history. I don't see anything else here. A little bit of a roll coming up here in middle of the day of a bear plane forming here. Yep. Hold on here. Visual order, bring to the front. Oh, is that in the front? Okay. Move that over there. SPX hammering out some kind of a place to tee off to go higher. There's SPX gamma down below here. Let's take a quick look also over here at we do my screen here. I don't know why this doesn't ever work. I just have to reset it. Done. Is that working? Yeah. Get back in front of my screen here. Is that better right there? That might be better. What are we looking at here? Let's take a look. Can we jump to present? These are tools from our Discord. Let's take a look at net flows. Oof. Call buying falling off a shelf right now. You see that? Lots of put buying today. Market tide. Ooh. Put premium starting to rise. Call premium going down. Topping a little bit here in market. And bears coming in. Been buying puts all morning. And they're looking like they want some blood right now. They're getting angry again. See if they can take this down. I don't know if they can get all that. I don't know if this can actually all play out. They might get a little bit of this. I don't know if they'll get all of it though. That half-hour trigger's coming up too. What else do I have here? I think that's it for right now. That's all I've got at the moment. I think we're kind of caught. I got a few more things I got to look at. Hold on here. I guess I should go through more of this. Hold on here. Dr. Copper's in the house. Dollar's in desperate need of a pause. We should probably talk about, at some point we need to talk about the energy needs of AI. Someone was downplaying the energy needs of AI recently. I think it was one of the banks was. They were saying that the energy needs are not that high. Is anybody out there researching that stuff? I've been reading about it the past month, maybe 2 months. We were talking about it earlier this year. or earlier 2024 in the early year part of the year, we talked about the upcoming energy needs for general AI, and they're significant, and they're exponentially significant. I'm interested in it because there's like Wall Street's like no. Wall Street's like nope. It'll come, but we're not there yet. It's way down the road. So I wonder if that's a hint to maybe a top in AI this year. They won't be able to scale because of, or there'll be blowback maybe from the energy needs of AI when it really takes off. Did you see Sam Altman saying he doesn't know which side of the singularity we're on right now? That's a pretty big move, or a decision that needs to be made from humanity to use that much energy in the forward progression of general intelligence. From the guys that know the math on this stuff, I'm shocked at how much energy will be needed. The vastness of it is mind-boggling to even think about. I don't even know how you get away with it without nuclear power. I can see like a mix of wind and water, but the cost for like dedicated data farms and stuff, the cost of the energy needed, cheapness, and the need for like tons of it right away. There's like I don't know if it's a cliff or I don't know if maybe there's a singularity for energy needs too, where we just need tons of energy. I know they're building stuff right now. Like, it's weird because like Wall Street's like, no, not right now. And I'm like, wait a minute, if they're saying we're that close, then they're focused on copper right now. I wonder if it's more of a deleverage AI, and then we'll come back and talk about that later or something. I don't know what's coming down the pike, but something is. Yeah, there's like a hyperscaler of energy needs. It's insane too. Like the math that's being sent my way, I'm reading about that. I'm like, what the fuck? And even NVIDIA is talking about it. They like not cryptically, but they talk at a higher level about those energy needs than most people understand in their talks and stuff. I don't know if CES this is being discussed, but it's magnitudes more energy than is consumed in the world right now. Where do you find that energy? I'm assuming it's fucking nuclear. It's got to be. The nuclear stocks have been cranking too. They've been cranking now for a couple of years now, but I don't know. Like I'm scratching my head over all that stuff. Even Michigan, they're building new or reopening, recertifying nuclear power plants that have been closed for 20, 30 years for this stuff. Yeah, natty gas. I'm kind of pissed about natty gas. I like gas stoves. Everything's turning electric right now, and I'm just like, fuck no. I'm so glad I'm going to be dead by the time you can't have you like, it'll be like, oh, look, that guy's got a gas stove still. I still use, I have electric. I have like in my house, I have I'll take a picture of it. I have like a garde manger. Is it pronounced like that? Garde manger? I have like a garde manger buffet near my kitchen. So like I have like the kitchen galley, and then I've got this like I've got like a long kitchen, and then there's like a buffet, or no, then there's like I wouldn't call it a buffet, but like where the kids sit and eat cereal and shit. And you walk past that, and I've got another buffet, and this buffet is like I've got induction burner on it, and I've got my KitchenAid stand mixer, all that kind of stuff, and it's like for like someone to cook. prepare food, or even like accoutrements for dinner and stuff like that's in between the dining room and the kitchen. And you can like make salads there or plate food, keep food warm, that kind of stuff. So I don't mind induction burners, but I still love a fucking gas stove, and I love like a gas oven with an electric fan for convection. You guys call that shit you don't call them convection ovens anymore. You guys call them like ninjas and shit. You don't call them toaster ovens anymore. Yeah, I use induction stove for desserts and stuff. I like the preciseness of temperature and induction, so it has its place. It's like sous vide has its place, accurate temperatures, consistency in temperature, that kind of stuff. I always like that stuff, but I still love a fucking gas stove. Like, I love the instantaneousness of it. I like the was it Briard? I'm getting old. The reaction when you get brown food and stuff. I love like that gas, like blasting heat. Maillard, the Maillard reaction. I said Briard. I think it's called Maillard reaction. Did somebody already correct me out on that or no? Yeah, air fryer. What the fuck is their air fryer? I'm like, oh, you mean a convection oven? Yeah, it's an air fryer, bro. Maillard, exactly. Maillard reaction. That's what it is. It starts with an M. All right. So market tide's going a little bit negative here. Market's looking a little bit weak here, 12 o'clock in the afternoon. We'll keep an eye out for this put mafia. See how much doom we get here. Maybe we can catch a dipped buy here in the middle of the day. And Bear's like, I want to close all that gap cap. More down cap. Give me a 200-point straight move down to 73, bro. Give me 62 and 61. Give me 300 points straight down. Fill me with all the pain and the doom. Yeah. Induction ovens, infrared technology. You couldn't cook on that shit either. My mother-in-law had an induction stove. Like, they're fine for like slowly warming something to temperature. You don't want to burn something, but like cooking, they're terrible. Sorry. I know some of you like guard managers out there probably like, fuck you, man. You wouldn't believe what I can put together in my station with my induction ovens, my induction stoves. It's cleaner, bro. Yeah, I think that's what it is with the gas stuff is like, I don't know what it is about, like, it's like instant, right? I don't know what it is. I have to think about what it is that makes it, why I like a gas stove more. I feel like electric stoves are like, hot or cold, right? Or a stove, at least, it's like, it's on and it's hot. You try to turn it down a little bit, it's hard to, manipulate minute changes in temperature. I can bring a pan hotter quicker maybe with gas, and then I can adjust that heat, fine tune it more maybe. I don't know if that's the case. I don't know what it is. Maybe it's just that I use gas most of my life. I just love a fucking gas stove. Love them. I don't think they can be beat. So what else? I think that's it. I think you guys have most of the information you need at this point. I'm going to take a quick break. A quick 15-minute break. Got to go potty. Got to lift some weights and stuff like that. We'll get into the second half of the day. Some expectations for down the road. And I'll be back with you guys in just a little bit. What else I got here? I think that's it. Let me just check. Let me check one more thing. Yeah, Dr. Copper. We'll talk about that later. Cutting in, soft landing. Oh my God. Catch up potential, tech laggard. Yeah. What else we got to look at here? See if there's anything else here quickly. Anything glaringly dangerous. Maybe we'll take a look at the. Maybe we'll take a look at silver today. I don't know. Let's show you guys this here. This is worst returns for month of December if you're looking to get long. Yeah, I'm with you, Tazo. We're so fucking far from those days, man. I think Elon's brought that up, right? Some others have brought that up too, right? Give up. I think Elon's message. This was a couple of years ago, Tazo. Basically he was like, we have to make the choice between. He was like, give up on. He was like, you need to be giving up on the climate fight and just accept that we're going to become Cyberpunk 2077. We're going to get black rain, black acid rain, and we're going to have to learn how to make food. Soylent Green. And we need more power. Corporate for AI, we need more power and robotics. Our future overlords are almost here. I wouldn't get too bared up here just yet. I think there's a trap in here for bears. I'm a little more bulled up here. Some of you might be. I think this holds. How was that? 130. Maybe push that over a little bit. I'm a little more bulled up here than everything is that downside move being suggested. I could be wrong though. This looks all kind of nasty right here. That doesn't look good. That looks pretty sickly. My yard. The mallard reaction. I saw that. I just saw that. The mallard reaction, bro. I'm getting old. I got too much going on right now. I got all kinds of craziness going on. Fucking world is going weird. We'll talk about Trump today. Or no, so we're going to talk about Elon today. We'll talk about Tesla today. Elon. We talked Apple and Tesla on Friday, saying it was due for a relief bounce, and that it's on a support zone. Tesla's on like a place to buy the dip to keep attacking new highs. We're talking about Tesla today because I'll read a story to you from Wolf Street about Tesla. Wolf Street put out a Tesla piece last week. We'll talk Tesla. So give me a few minutes to come back, and then I'll be back with you guys in just a minute. Also, I've got the news squawker on. Yeah, Baba. I've got Baba, or I've got Timu flashing on the back end for me right now. I'm watching China stocks in the background, and I'm getting hammered. We'll talk China too, because we know that we've got special measures coming in China. Do you know about that? It's not just like Baba. There's here. Let me see if we can find anything here. I'll come. Let me come back. There's some like China stuff going on in China right now. We'll talk about it here in just a minute. Doom, baby. How far down are we going? Just a quick note here that I was looking on Bookmap to see how bloody that was. It's looking fairly low. It's somewhere down in here. See if Vol Control Gang's in here or not. SPX testing its support right now at 6000. 6003.49. One more note to you here, too, just so you can see this. This is SPX Gamma. This is where the Gamma flip is, right here.
Fed bids for 3-year notes total $12.7 billion.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
Just note that this Gamma flip is right on that daily trigger in SPX. If you begin to lose support, we race down here. We get underneath that Gamma flip. It's woohoo party time. So this kind of needs to hold here. They might do the altruistic thing. They're just not going to do it until, they're probably not going to do that altruistic, like what we promised until the last 2 years. That's my thought, at least here, if they even get it. If Trump does honor all the bullshit that he said in 15 and 16, and then if he does what he said this time, it probably wouldn't be until he can, pen that shit in last 2 years and say, oh, look, I did it.
So in 10 minutes time now, at the top of the hour, the US is due to sell $58 billion in 3-year notes. The prior bid cover ratio was 2.58 and the prior high yield was 4.117%. So this week's Treasury supply commences today with this 3-year note sale ahead of a 10-year note reopening tomorrow and a 30-year bond reopening on Wednesday as well. The sales have been put forward a day ahead of the former President Carter's state funeral on Thursday. The auctions also have to compete with an expected deluge of corporate bonds deals over the next 3 days, when most of this week's $50 billion of issuance is expected to take place. Friday's jobs report as well also presents additional event risk surrounding this week's Treasury supply. I'll make note of the latest CFTC positioning data, which shows that speculators were net short 1.8 million 5-year note futures, a near record amount and a possible source of covering demand at this auction. So in 5 minutes' time now, at the top of the hour, the US is due to sell $58 billion in 3-year notes. The prior bid to cover was 2.58, and the prior high yield was 4.117%.
Get that workout going. A little bit of blood here, pulling back, losing, bulls losing support. Oh boy. Hopefully is Chase Winter here today? Or do you think Chase will come in after the drop? We'll have to do like the Chase rule here. Is he here this morning? Like Chase should be here right now, not later. I want to buy this dip right now, like this one right here. I want to buy it bad, but I'm not. I'm going to wait a little bit more. A little tiny bit more. I want to buy like, let's even get one more down move right here. Just hold that right there. Just race away, like right here. What I got here? 596.96. See if we can buy that. CJJ, buy dip. Buy the dip.
Trades from Macro Headline Risk with Financial Juice Pro. Now only $99 a
Right there.
year for our real-time service.
It's so dangerous buying the dip down here. It's so hot. A little bit lower, like right there. A little bit more. Fake these bears out. Get them all lathered up.
Surely
They change out their. They don't use like the Barbasol cream. They start using like face soap and shit.
Auction results normally follow a couple of minutes after this.
Got their barber soap out with their brush. Their bull hair brush. Bull's starting to lose a little bit of support here. Trying to hang on tight. Watch this a little bit closer here. All I want to do is close the gap, Cap. That's it. Just want to close the gap, bro. You can go right back up there. Yeah. I don't believe you. I swear, Cap. We don't want to go into negative gamma, bro.
Treasury when issued 3-year yield 4.32% ahead of this $58 billion auction. So again, Treasury 3-year yield when issued 4.32%.
I never did HYG this morning, did I? HYG got hammered before they opened this morning. It's looking pretty good here. No pivots on this. HYG just keeps pumping. This is HYG, just keeps pumping. It's bullish as fuck. 2 years, super bullish. Had a great back test of the cross of the daily and weekly, or daily and hourly trigger. Looks beautiful. So we can get down here and buy this. Trading down where I want to see this hold. And bears trying to cause trouble. Trading R2 right now. No dip buy for me yet.
Yield of 4.332%, 4.332%. The US selling $58 billion and awarding 84.31% of bids at high. Primary dealers take 19.36% of the sale, direct 19.67%, and indirect 60.98%.
$103 in the afternoon. I want to buy this right now. Still haven't bought it yet. Why does this thing not work? This 1 minute trigger here is fairly vertical negative. I don't like that. I'd really like to see at least something like this. Get involved up here. Till then, I don't want, until the squeeze up, until that happens, I have no interest here. See what happens here. Expiring today. 597.30. 600s are 8 cents. That's cheap. $600Cs are 8 pennies right now. Like, you're not trading 600, bro. There's just no way that's happening. They're telling me no. Watch this real close. WM might have a little more down to go. Qs has a little bit more down to go, maybe. There's an IW. There's Qs. Maybe just grind in here would be nice too. We're just doing some grinding. I would accept that. They stepped right in here and bought. There's a nice wick here in the 1 minute. There are buyers here. I'm just watching this unfold right now. Patience. VIX 9 days looking a little bullish. I want to see if this VIX 9-day rejects above or not. Here's VIX 9-day. Like, can we get a rejection? Like up here and then down? But that still equals blood in S&P. This still implies like quick downside S&P 500 move. And that would say to you, fuck you, Cap, you're not getting your dip buy. And this is super scary here. It's party time. That's a negative gamma down here. Did I buy the dip yet? No. I'm looking at 600 Cs. They're now 7 cents, so 6 cents, 6 cents, somewhere in there. Well, they're fucking worthless. They're a good price. We'll see if this flattens out a little bit. Price gets above the 1 minute trigger. I want to buy it right now. I'll tell you that. Like, it's a risky trade, but Little bit more patience. I like the trade. I like it just for the risk or payoff. 6 cents for a fucking 7 cents for a 600C here is dirt cheap. You could probably pair that with
US 1-year credit default swaps hit 22 basis points.
a pretty nasty put for tomorrow or Wednesday. Like 0-day calls for today for 6 cents. And then if you get the bloodbath down into tomorrow and Wednesday, you're going to get paid either way. 6 cents should make or break you on a put trade.
With the latest and be on the bleeding edge of news for non-farm payrolls, then sign up
I just think they're dirt fucking cheap. They're worthless. Basically pennies.
worth of our service for the price of 1 month and save 92.
HYG looks a little violent. Let's go look at HYG really quick. HYG had this little bloodbath right before the opening bell this morning. They got a bear cross right here. See just a quick rip down, then up. That would, of course, translate to closing the gap in SPY. Even though overall it's quite bullish. There's something else being done here too that is not being addressed, which is a slingshot effect. This should all SPOO should be up bigly. And it's not. So eventually this does slingshot back up. I've got some better charts to show this on, but I haven't posted them yet. So this divergence, when it fixes itself, is going to be big. VIX 9-day implying maybe some more up, but then down. That's my question is, if they can't get us, if this is too dangerous down here, then you kind of want to see this just turn right back up. You don't want to see this gamma flip get violated and get nasty down here. Pretty bad. It's like a fucking trap door right here. Yeah, I mean, this is Grubster. This is where the bears want to be. They want that sweep lower. I think they get it. I just don't know that it's today right now.
NDP leader Singh reiterates a promise to vote against the government. As Canada's NDP leader...
I'd like to see the squeeze out, then the news tomorrow, drop the market on that news. And you got more bad, no, not bad, but you got big data tomorrow and then Fed minutes on Wednesday. I'm buying. Oh, wait a minute. I shouldn't say this here.
We are shortly expecting the results from the Fed's reverse repo facility. 57 counterparties take $231.926 billion at the Fed's reverse repo operation.
TNX fighting its way to go higher again, or excuse me, or not HYG, TNX clawing its way, trying to break above 460 or 46, excuse me, 44. going on, Bears? Do you have this feeling of losing control right now? Do you feel it? Do you feel it slipping away right now? Not a lot of time here, Bears. What are you doing, Bears? What's all this? But turn around Monday. Wrong way, spy. Supposed to be way down, spy. Way down. Down 300 points, spy. Wrong way. We need a Trump tweet right now. Someone needs to get Trump on the horn. I got to bring that up just in case we get one. Let's see where we are. All right, last time he tweeted was 17 minutes ago. We're in the clear so far. Back to flat again. Was down 100 and up 100. Let's see what happens here. You know, those 600s, man. Woo. So cheap. So cheap. My buddy sent me a meme this morning. Hold on, let me post this for you guys. my buddy sent me this morning. Hold on. I think everybody will get a giggle out of this, even MAGA. I mean, this doesn't seem like it's too I haven't been on Discord at all other than using the tool. I've been trying to take some time away from screens. Especially the internet. The internet's fucking crazy right now. I'm like, I need a break. Here, let me see if I can post this for you guys here. Hold on here. How do I post this? What am I doing wrong here? File? Something's wrong with my... There we go. Post that one from my phone. See if that... Hopefully this doesn't piss you off in the Discord. I thought that was kind of humorous. How liberals treated each other in 2020 and 2025. Terrible. I'll delete it. Let me delete it right now. I'll delete it. Doesn't belong in our Discord. Hold on here. I deleted it. I deleted it. You missed it. All right. Hold on. I'll bring it back. All right, hold on. I'll bring it back. Hold on. Hold on. All right. Hold on. Well, I don't want to piss anybody off. I'll delete it in like 2 minutes. I promise. I got a kick out of it. I haven't been on the internet, so I haven't seen a bunch of crap go. Whatever's going on the internet, I haven't seen. I'll like your shit too. That was funny too, GMA. This Captain Jim James Island down here hanging out. Which way do we go? Hanging out in Captain Jim James life raft in the middle of the day. 131. Looks like we've made it so far. We haven't had death and destruction yet. We still got to deal with 2 p.m. and we got to deal with 2:30 doom. Fucking bears trying to come in and fuck around with us. Anybody got a? Hold on, I'll take the pause of the show pause off here. Hold on. What are we doing here? Break time, be right back. Old man time, be right back. Does anybody have Does anybody have like I don't know. Does anybody have like 600 on their bingo cards for today or tomorrow? Anybody? Am I the only one with that on my bingo card? You know, you don't get bingo every day. It's not like you can explain. I guess if you're an old person, they give you lots of bingos, right? So the big markers and stuff. Anybody got like 607, 605? Anybody? 605, 607 from here? If the way ain't down, which way is it? Anybody got like 604, 607? Am I the only one thinking that? You're a bear, you better get a move on because if the way isn't lower, you got 605 right on JJB. Yeah. If we're not going to head down now and we're going to save it for later, we'll start chatting about. Well, they're trying. Look at them. Yeah, angry. So much anger down here. Uh-oh. I want to get that new low. Oh, did they get it? Hold on here. There's the new low right here. This would be new low. They're stinky about it. You can see it. Here, I'll draw it in. Do I need to draw it in? Probably not, but. Can make that yellow and make that yellow. That white dotted line right here, where you want to watch that closely right there. No new low yet. Are they going to let this count hand grenades and horseshoes? How many minutes do they get after 1:30? They get like 140? 145? I don't think so. They really are trying, though.
US Congress certifies Trump election victory, clearing the way for his January 20th presidential swearing in.
Did you guys hear that just now? U.S. Congress certifies Trump election victory, clearing the way for his January 20th presidential swearing in. What else do we have here? That's all I can see. I don't see anything else. Oh, he just posted certified.
Protect your trades from
I can't believe how funny Trump's tweets are.
$99 a year for our real-time service.
He just posted like a meme that said certified. I gotta post this in the Discord because I just posted like a liberal thing in there. I'll post the pro-Trump thing. He's so fucking petty. It's like it's the little things in life, right? It's the little things, Trump. Oh God, it's so terrible. Uh, oh God. We've like straight memeified everything. Everything's memed. It's like we like. Can I get somebody get me some brawny? Brondow? Is it Brondow? Brawny? What is it? Brondow? I don't know how it was pronounced. I reposted it in Discord. Did I delete it again? I thought I posted it. I reposted it. I reposted it. It's Brondow. That's what it is. Exactly. Oh God, I can't do this. I got 4 years of this. I'm gonna need a lot of gummies. Somebody get me some gummies. I'm gonna need a bunch of like 20 milligrams. Super stack them. I'm fine. I'm fine. I'm fine. It's certified. Come on, Spoos. It's been certified, bro. It's in gold. We should be celebrating in the stock market when it's been certified. Oh God, Kratom. That was like really big out west for all the junkies, all the pillheads and stuff. Way back. Is that still a big thing? Is like Kratom still a big thing for people? Uh-oh. I don't want to see that. Don't be doing that. Still no new low yet. They are trying, aren't they? This looks ugly here, doesn't it? Like looking at this just looks like it wants to make another leg down. It's turning up, but not before it wants to wick the fuck out of the market here to the downside. Bull run over. Game over, man. You got it in Detroit, Kratom? I used to, like, how long ago? 10, 15 years ago, it was really big in the West. And I was never like, I was never a druggie or anything. Like, I've always liked like mushrooms and Molly and stuff, but going to like Burning Man, but I've never been like a pot smoker or a drug user of any kind. But being in and around the business that I was in for a long time, there was a lot of like sketchy shit going on underneath covers. Like a lot of Adderall abuse and then pill abuse and stuff like that. I never got involved in it because I saw friends from when I was younger get sick and death. I saw one of my close friends was an accountant. He lost everything from taking like opioids. I had a roommate in college whose brother died of a heroin overdose. He was a valedictorian, first chair violinist, you name it. He didn't make it. He died when he was out of high school and going to college, and I was already in college with my college roommate. So I was always like, "Fuck that! I'm never gonna try that shit." I know it's used though by people that have pill addictions, so I got nothing negative to say about it. If that stops you from doing pills or opium and that kind of stuff, then whatever it is to get older. As a matter of fact, I was reading a story this weekend. I've been staying off socials, but I do read the news, like actual stories. And there's a story about, is it Gen X? I'm too young for Gen X. I'm not a Gen Xer, by the way, if you're anyone wondering out there. I'm not a Gen Xer. I'm like right before Gen X, or right after Gen X. And they're talking about Gen X and my generation getting older. And my generation is, as they're getting older, it's like the Gen X and my generation, they did a lot of drugs when I was a kid. A lot of different drugs. Designer drugs started coming on the scene. Believe it or not, Molly and ecstasy was legal. It was being prescribed to an older generation for me. Cocaine was huge when I was a baby kid. And then people did more drugs when I was a kid. Or a wider selection of drugs, I should say. So they're talking about this right now with my generation. And they're not like big pot smokers, drinkers from like the boomer generation or whatever. But they're dying of drug overdoses. Oh, this isn't good. This isn't good. In later age. So what they're doing is they're starting to retire right now. I notice a little bit of it when I'm out and about and see people my age, maybe slightly older than me. I see a lot of people older than me that do like they do a lot of steroids. They do like men's health, they call it. They're way more apt to be doing drugs like mushrooms, Molly. They say they're doing cocaine and stuff and heroin. I haven't seen that. I haven't seen that in any of my friend groups, but the statistics are saying that they are. So you remember seeing all those people dying of fentanyl overdoses the past couple of years since like COVID lockdowns? And older people, right? 30s, 40s, 50s, stuff like that. The numbers out there are saying that the generation just above me and my generation, I guess kids today don't do drugs. The vast majority of kids today don't do drugs. They like try, like marijuana is not cool anymore. Kids aren't statistically, they aren't doing drugs like my generation did. So like my generation was Weird, to say the least. Very underreported what my generation was. There are some documentaries about my generation, but my generation was really fucking weird. So when I was growing up, we came out of like this like 80s and 90s, early 90s, like 80s. There was like 70s, 80s, like cocaine and Tony Montana and that whole thing, right? And a swinging pendulum of women's rights and stuff. And there was a lot of hope when I was a kid. So I was a kid of the 90s. So, and then an adult in the early 2000s. But there was a lot of like that. There was like hippies, but not quite hippies anymore. That was like dying off. We're watching this right now to see if this falls or not. This isn't good. I don't like seeing this. Staircasing down right now. The weird part about that time period, though, was there was a lot of hope, right? But this is what people don't talk about, was that there were still like defined cliques and stuff. There's like, I don't know, like preps, I think we called them. We had alternative people, punks and stuff, playing punk music, and the punk scene got big and stuff. And the hippies like grew into their own hippie thing. We had like rise of rap, all this other stuff. Big music genres were developing. Punk becoming more mainstream, rap becoming more mainstream. Blood in Us right now, getting shanked right now. Spy starting to lose support. Trading down into this. We'll trade this 1 hour right now. This is not good. We're going to go lower too. We ain't done going down now. So support's been lost on SPOOs. SPX giving up. If you watch down here, SPS began giving up its support back here. We're going to go all the way down and trade that gamma flip. Let me show you this really quick so you can see it. SPX gave up its support back here at 1 p.m. Could not recover. Tried to make an attempt to recover. Rejected. We'll now trade lower into the flip and test this 30-minute trigger, this hourly trigger. But I will warn you that there is nothing down below here. So there's no support for bulls. The next support for bulls is at 5,900. So we should begin to make our way to the downside at this point. Nothing else holding anything up here for bulls. So back in that time period, it was really weird. People don't talk about this. So I'm reading this stuff this weekend, and they're talking about this next generation coming in to being retired, like retirement age. We're not quite there. People are starting to retire from this generation X is starting to retire or think about retirement. And like the AARP people and the Fred, and they take like statistics of older people, see what they're doing. I think this article said they didn't grow up. This generation didn't grow up or something like that. So like the boomers, like famous for like marijuana smoking, alcohol, drugs when they were younger, but not when they were older. So if you were to go to like a retirement community today, you see all the boomers there. Boomers that are still alive and kicking. There's not many of them, but they're still there. They're not known for like cocaine. They're known for like sex, marijuana, booze. This new generation coming in is known for drugs. And then the one behind it that's going to come up in the next decade or two, we're like the height of experimenting with drugs, designer drugs. Like all of your like your Molly mushrooms, your ketamine, methamphetamine started to come into favor again. Heroin came back into favor again. All this kind of stuff. And what was really bizarre about my childhood, especially my high school years, was not since the 60s and 70s, had there been a time like well, depending on where you lived, the late 80s to early to mid to late 90s. And what that was that there was a normalcy for teenagers, young adults. So on the surface, everything looked normal. You had like jocks and you had preps and you had nerds and you had this and you had that. And everyone had their own groups and stuff. And you had like expansion in music, expansion in culture and stuff like that. There was a lot of optimism in like the end of nuclear weapons and climate's going to be saved and all this other shit. And underneath the surface, I was in the high school and I had no idea what was going on. It's like a normal high school kid. And in my high school, I started seeing kids that were like I want to call them nerds, smart people that are nerdish. And they were all of a sudden cool. And they had money. And they started to like dress different and stuff. And that was that rave scene that was going on underneath the surface of, it started begun to impact a younger generation. And it was really bizarre because there was this whole other world going on outside of school that was very adultish, very dangerous, very adultish, and not in any way youthful. So you also saw like the rise of like raves rose all over the U.S. and people were like throwing parties for like 1, 2, 3, 4, 5, 6, 10, 15, 20, 30,000 kids. These kids are all under 18, like 16-year-olds, 14-year-olds, 13-year-olds, 12-year-olds. And it was wild. It was wild because you'd be at school and parents didn't know about this stuff. School didn't know about this stuff. And a lot of kids didn't know about this stuff. Not initially. Later on, like the rappers got into the scene and the hippies got into the scene and then the college kids got into the scene. But no one really knew this was going on in the U.S. at least. And that doesn't speak for Europe in any way, shape, or form. But in the U.S., that movement as it like grew and like became a thing was really fucking crazy. Then like the mafia got involved in it and it like grew into this really bad thing over time. It had its heyday. But I was fascinated by reading this data that came out. This data that came out in the story that was written this past week. Because all of these people like me are starting to see their kids go to high school, college, and they had all like buried all of that stuff when they were young, when they were adults. Becoming adults, you gotta raise kids, gotta be college now. I got a wife, got kids, got all this stuff going on. And now that all that stuff, that adult responsibility stuff is starting to go away, you've got a class of adults, older than me, of course. This is like a decade older than me. But then the next class, these two classes that are coming in of older adults, what do they do with themselves? And they're saying that the statistics are saying that they're doing drugs. And they're having lots of unprotected sex. Like even more than the boomers down at the villages. Like these people just don't care. And I found it hilarious. Let me explain how serious this is. Don't quote me exact on this, but overdose deaths above 50 years old are up 15% like this year. So it's not like they're doing marijuana. They're doing drugs. Your grandma and your grandpa are doing drugs. Yeah, like right now. I'll get the article. I'll post it in the Discord. I'll find it and post it. It's eye-opening and fascinating because this shit doesn't lie. This isn't opinion. This is fact. So it's just wild to see because you're like, I never thought about all of these people that lived through this moment in history back in, I want to say late 80s, early 90s. Then it hit Wall Street. Like by mid 90s, late 90s, it got huge. Early 2000s was when it was gone, right? Like Coachella was coming into a thing. You had like I don't know, like all the big producers doing EDM at that point. And but all those kids that grew up there, or adults that were into that scene when I was a kid, they're all starting to age out. They're like, I want to go back to a rave and do drugs. The kids are in college. I'll find the article. Hold on, let me see that. Never grew up. When a generation that didn't grow up. Is that what it's called? Generation didn't grow up? Let's see if we can find it right now. Right here, 6 days ago. I got it right here. Hold on. You got to read this because this has to do with, not now, of course, but I just posted it in the Discord. You guys want a web page archive of it? I'll give it to you. Hold on. I'll get you a web page archive of it, of the story. It's a fascinating read. Here's an archive version of it. And the read is fascinating because you're talking about people that came back from World War II. Then you're talking about the greatest generation having kids and stuff in the 50s, and rebellion of the 60s and 70s. You got the ass end of like the cocaine users from the 80s and stuff. But then you get like full tilt drug experimentation in the ass end of the 80s, 90s. and they're going full bore. Like these people are 60, right? I would say they're 60 to 50 years old right now. Probably so 50 to 60-year-olds. And the younger generations aren't doing this. We have less drug usage going on generationally, right down to my children's age. Less overall drug usage, and the breadth of drug usage has gone way down. Now, maybe they get fentanyl or something and used unintentionally on their drug usage, but they don't use drugs like they used to. That was part of my generation. It was crazy. You're talking like normal kid in school during the day, right? You go to high school during the day, and then you leave. You go see your parents, do your homework, and you sneak out of your house, and you go to like a rundown, abandoned mall in suburbia, and there's thousands of people there, and an international DJ playing. Costs $20 to get in the front door. It's not organized. There's no permits, and even when they did do permits, it was still super fucking sketchy. There's nothing like that going on in the U.S. right now. Nothing. Not for that size. And there hasn't been since either. Everything is enshittified today, it seems. By the dip. Lost support. Lost support right below this yellow line. This now becomes resistance. This all becomes fuck you too. This was the actual support up here. Bulls must hold that. That's your demarcation line that turns red. This is where sellers are in control now. That's the bulls must hold. That's the gamma bar. Bill's in deep shit here heading into the middle of the afternoon. I was hoping for a dip buy up here. Not happening. This right here is the target to the downside. So you can see it all over there. And you've got all this stuff down here too. And this is where party time is. Start closing gaps. Start getting jiggy to the downside. That article is fascinating. That article is, I never thought about that. I was always like, yeah, that's like a part of your youth. That's not like nothing. Why would you ever want to relive that? It's like a different phase of your life. You're young. And they're saying that people are not, that they're reverting back to their youthful experiences, or maybe they were never able to do drugs when they were young because they were too responsible. Now they want to. I don't know. Is it all right? Yeah, here we go. We got a new low just then at 2 p.m. So lots of new lows going on. We're in Beartown right now. Hourly trigger coming up to cross the daily trigger. Do we get the successful backtest of the hourly trigger this time? Or do they start blasting us to the downside? Should put that down there, right? This is where shit gets nasty. Start taking all these out. Start taking all these out. Start taking all these out. Now trading 95. Q's giving it up too. Q's trying to trade 519. They're at 522 right now. Q's trying to trade 519.08. $5.14 on Real Doom. This would be Bear's next target right here. Always note that once we're underneath that half an hour trigger, violence gets fast, the downside. If we reject this right here, it's going to be a nasty downside move. That's right here at 595.60. $595.69. Scratch that. I have the wrong number. VIX 9-day trading up to its half an hour trigger. A little bit of rejection on that half an hour trigger. It's bullish for S&P, but if it holds, if VIX 9-day holds this 1459, can catch a new high on 1486, you're going to see real blood in the market here. Whoop, go back to that VIX 9-day. You'll be trading at least 1560 on VIX 9-day or 9-day. VIX trying to pile through the half-hour, daily, and half-hourly trigger that's breaking below the daily trigger. Dixie trying to find itself on the daily trigger. TNX staring at doom. HYG trying to recover. IWM trying to hold on to its hourly trigger. Q's trying to hold on to its half-hour trigger right now. SPY squeezing. SPX danger close to the gamma flip. Party time's a little bit higher. It's like right there. I thought it was a great article. I was reading it and I was like, does this make me old? Like, two things I got from that article. One, why am I reading this? I wasn't going to read it. It's like, I thought it was about boomers. I was like, what do you mean? I was like, boomers grew up. Like, boomers, like, became everything they said they weren't going to become. Like, that's always been bizarre to me. And then I had it described to me. Someone showed me statistics from the 1960s and 70s. And they were like, see all these people that were at Woodstock? Only 15% of them believed that. Because it had become a cultural phenomenon, but not quite true ideals and values of that generation. Kind of like everybody likes pop music, right? Or a lot of people like pop music. Or whatever the new thing is, but they're not necessarily that person. Whatever politics are assigned to that, whatever. So I started reading it, and then I was like, then I got drawn into it because I'm like, oh, this is talking about, my generation's being talked about in here too. This like in between generation, generation lost, I think we were called. I'm not sure. Yeah, the Bulls have lost it. So this is all Beartown. They've lost everything here. I think there's a lot of danger here for Bulls. I think we got a large order of doom coming. Still in positive gamma, though. We're not negative gamma yet. We got to be down here. We're still supportive here. But if we start heading down here, party time, baby. What else? Oh, nice. I got to call my mom. Okay. On that subject, I have to call my mother. She's a boomer. Mom and dad are both true. Like, I know boomers are just old. Anyone over 25, anyone over 20 is a boomer, I guess. As far as my kids see it. I was talking to my oldest and I'm like, can you imagine you're going to be old and I'll still be alive? I was like, one day you're going to actually be old and I'll be decrepit, still around, or at least my wife will be. One of the two of us will make it. And she's like, no, daddy, no. I'm like, I'm telling you, you're going to be, one of us will be kicking off when you're just starting to feel the pain. And we'll laugh at you at old age. We're still in positive gamma. It's a place to buy a dip. We're in positive gamma here. I'm long here, so don't ask me what I'm doing. I'm already long, so I'm long, but I don't want you to be long. I don't want you to do what I do. I'm gambling here. My thesis is down, but I just can't resist buying calls so cheaply here. I don't care if they burn. If whenever they're that cheap, I just can't resist. I could probably buy that 3 times and it'll pay well. Like, I can't resist when it's that cheap. When they torch all those calls, I'm like, yeah, 6 cents. Give it to me. Give me that hot cheap ass 0 dates. We'll do it again at the close too. All right, not much going on here. It's 2:11 right now. We got the half an hour doom at 2:30. We've got 3 o'clock power sour hour coming up not too long from now. Then we also get an expectation forming in the week. We got a lot more data today than we had over the weekend. People coming back in the market. So we'll have a weekly preliminary expectation for the rest of the week here for you. Between 2:30 and 3 p.m. So you can be positioned for the rest of the week. What else? I think that's it. Oh, damn it. I need some Tums. I took a bunch of vitamin D and I took all my medicine this morning, vitamins, multivitamins. Then I took ibuprofen and drank coffee. That's not a good mix. Ibuprofen, vitamin D, multivitamins, coffee, and water. That's not a good sloshing around, is it? So I'll be back with you guys. Give me 15 minutes, 2:30. Come back, and we'll do an outlook for the. I'll draw out some crayons for you for the next week or so. Start looking for January, and we'll talk about the coronation trade for January 20th and the rest of the month outlook. And I'll be right back with you guys. We're going to talk about. I think I did this with Tesla and Apple on Friday, but we got to talk about SPY and Q's expectations for the rest of the month and Q1. So you'll have those from me today. I think we can draw those out today for you. I'll be right back with you guys. Give me just a few more minutes. Just want to set everything up. The second here, still doing some work here in the background. Ain't looking good. Man, that is still there. Like, I don't know I don't think that matters. Like all of this horse shit down here, still up. Maybe up there, 620. There's some fucking nasty coming our way. All these buyers are real. This is the instigation. You're not going to give that up that quickly. You'll give that up underneath there, though. That failure will pull the fucking nail in the coffin. That doesn't matter. That matters. That matters. That matters. And then this is right here. I don't want this right here. This is bad. That's bear market, end of the year. Sooner on this would be better than later. I really don't care what happens here. I see that one. I see that one, no problem. Does this come sooner? The scary part is here. This is the I don't know over here. That's the I don't know. And that puts you into like a summertime low, and then you get into like fall and people are losing money. They're just like, fuck it, selling everything. Tax loss harvesting, bitches. September, October, doom, crash. There is a top in here. There is a market top. There is a topping. This is going to be key right here. Yeah, there's that whole move right there. It's going to be a fairly Important move right there. What a big giant fucking green right there. A big green line right there is going to be, this is going to be crucial. No new high. Stopped at this high back here. Bam. Can we escape that? I mean, that's a crash, but that's not a bear market. But, dude, it can become one. Then you go into 26. You doom this shit up into the year, come into 26, and that's bear market. 26, 27, bear market. Oh, I don't know if I want to show you guys this. And this 640 could be like 625. This is a 4-hour chart. This is all going to be important here. We're definitely setting up like a we're setting up a bunch of question marks up here. 625, 640. Run the market hot, bubble, maintain bubble, keep going. A bunch of failures though here. They'll take this market away quicker than you can think. This would be like 2027. We'll talk about this here in a minute. Here's July. Get into fall over here. Oh shit, we never got the returns we wanted. We'll come back to it in January of 26. Before you know it, they start flushing the fuck out of all this. 407, 332. That's a lot of down, though. It's a lot of giving back. It's almost half right there. Big question marks up here, too. Big question marks up here. Big question marks over there. Bear market. Just a crash. What's the percentage down on this? 20%. It's like big question marks down here. This is going to matter. That's 550, the lowest low. And if you lose 550 and you begin to reject 550, we go into a bear market. Guess I got to save these and show them to you, right? We don't need this one up, do we? Nope. Close those out for now. There's like this there's setup for crash and there's setup for bear market in like 26, 27. I should go over this with you guys in more detail because doesn't mean we can't get more highs. Like institutions are getting out. They haven't started yet. Top is not in, and but man, I would assume that they're going to start this year in the next like 3 months. I don't think they care about. I think their outlooks too. I'm looking at their outlooks for end of year. They're like open to the possibility of, and there's like 2 question mark places in the market for this year where you get the bubble and they're outside of their expected range to the upside, and you don't get the bubble. And it's a fucking shit show. 26 and 27 don't look pretty. Right now, they don't look pretty. 26 and 27, they don't look pretty. Some of the things I'm looking at say like we're going to get a major fucking correction down into like June and July. And then like September, October, you're just going to say, fuck it. Let it all hang out, sell the market. We'll start again in 26, but it'll be too late at that point. And like 26, 27, they don't look good. This isn't today. This has nothing to do with today or the price of SPY tomorrow into the inauguration and stuff. This is bigger fish to fry. Because we know we're coming into this weird place where it's like, do we thread the eye of the needle? Do we squeeze, bubble it up, and make stupid fucking highs? Absurd. It's really absurd. There's a few of the banks are calling for 7,500. I see that. I see that trade. It's there. It's like the 1990s. It's there. It's definitely possible. It's a very high probable outcome. The other high probable outcome, though, is not pretty. You get like a high coming into the inauguration. You might get one more high, like 625, 640, maybe. Call that summer, maybe, or even spring. Even right now, we could do it. And then, but then thereafter, it gets really sketchy. We start breaking. We've already broken. I'll show you what we've already broken. Let me show you guys this really quick, at least. Yeah, shit, I got to bring it back up, don't I? There's cracks forming. They're not there yet, but there are cracks. I'm going to show you what the cracks are. I don't know if you can see it here, but I don't know if you can. I'll make it plain as day for you right now. On a 4-hour basis, there are cracks forming. So just look at that one white line, right? This is a 4-hour basis right now, and the cracks are forming right here. That's bad. Let's going back to September 24. There was some bad here too. This starts going all the way back though to the initiation way back here. Way right down here. Not necessarily determining the outcome, but you break trend, start a new trend higher. Even then, it brings into question, if you go back here to 640, 625, 640, even with new trend, that you're still in the topping process here. So like in higher frames, it looks like higher frame, if we're breaking this, Do we stay on trend or not? And if it's a no, you don't get your 7,500. If that trend is actually broken, get underneath it. Trend is gone. Super trend is gone. Not quite there yet, but it could get ugly in 20. This is 26, 25, but you figure this is fall of 26. It's like kind of like 26, and you're just like, you know what? Fuck it. And you get October, November over here. They swoop in, sellers swoop in, and destroy the fuck Black Monday shit for the 26 becomes a mess. Or not, 26 becomes a mess. Velocity says that's going to happen. Too. This is the bear path over here. This is the bear doom. Still not done with the highs, though. But this is going to matter. This whole island here. This whole island break matters. This is a warning right here. That 4-hour break is a warning. Like breaks with this and this. And you take all that away from them. Maybe I won't show that today. Don't give the Bears any hope. The warning shot is there. Well, I can assure you of that. The 4-hour was breached. That's a warning shot, without a doubt. You can't say it's not. It's a precursor. 4-hour trend, broken. That takes you down to the daily trend, takes you down to the weekly trend. Now the question becomes sentiment, right? It's always fucking sentiment. Like it becomes like a question of like, and then like time. It's like time, sentiment. How much time do we have left to get this stuff done? I'm looking at worst case scenario for how bad does it devolve? How quickly does it devolve? How quick do we start eating our own children? We're not there yet. We're not there yet. We're gonna be there. 100%. That's not even a question. It's not even a question. I don't care if we squeeze or not. This shit's coming to an end. I don't know if it's sooner or later, though. That hasn't shown me yet. So, or like the velocity hasn't shown me that it's ended yet. Triggers haven't shown me that it's ended yet. So it's up and to the right until it does. Because as you know, we can get, the market will remain irrational longer than you can remain solvent. But it's there. The party never ends. I do question that. I do question, like, do we just get the crash and then we get extension of the market? It just gets bigger and bigger and more monstrous and disgusting. Or is this like the finish of a fifth wave, like a grand fifth wave that's finishing? And if we're at the end of this fifth wave, is it like a year, 3 years? Is it 10 years? Is it war? What is it? What actually is it, like fucking bird flu? I don't know what it is. It's going to send us into that tailspin, but I should do a poll on that. We'll revisit it. 27 seems to be the crux of all of this. Like, I don't know what happens in 27. I don't know if it's China, Taiwan. I don't know if that's why they're talking about all of that stuff, or if it's more of a larger war, larger Cold War, larger conventional war around the world. I don't know if it's bird flu. I don't know if it's our fucking government. I don't know if it's the dollar or whatever, or the devaluing of the U.S. or what they're going to blame it on. They're going to blame it on something. I don't know what it is. I guess they blame it on all that shit, right? Sweep it all up, and then we'll be fine again. I guess my question, though, is how long does it last? Like, does it last for a long time? Does it end into it? We get a bottom in like 28? 27, 28. Looks like there'll be a bottom in 27, 28, somewhere in there. It looks nasty, though. I'll say that. It does look nasty, whatever it is. I don't want to call for that either. And like making those calls is fucked up. Like we're going to have a depression like 1928. I heard Elon called that. I think Vivek maybe even said that. Trump might have even said it too. Like you get those policies in the end of your term. You get a refined MAGA. I think that's like whatever his vice president is. Bleeding now into it's 257, trying to catch new lows right now again into the close, and we'll start talking about outlooks for the rest of this week. The outlook right now for Q1 is okay-ish, but I can see why sell side Charlie and Rubner and Pravorsky are getting all bared up, and sell side funds must be getting bared up too. I'm assuming that they'll just say things though like, "I closed. We're coming back to the top again to short again." They're definitely up there shorting. I'm going to assure you of something here. That December 18th sell, they're going to stay up there and try to fucking sell this market. They're going to switch to sell side as we get into the rest of this year. They're going to say they called it on December 18th. That's what they're going to call. Even if we get a new high, they're going to say market's rolling over, which we kind of know is already happening. But is there a whore the market out, whore the price of the market out between now and then is the big question. That's always the big question mark. And that's unknown as of right now. So, I don't know. There's a lot to talk about. Do sellers become more prominent? Yes. Even with new highs, they do. They have new life breathed into them for sure. Breaking through daily now, and we're about to get into party time. The gamma flip is coming up. We're very close to it right now. Gap is down below at 595. That's also where the hourly trigger is. That's going to take all this stuff out down here. There is no stops underneath this party time. Your first target underneath party time, 591, 590. Good place for bulls to get serious. But also note that with this failure, you're likely going to see 570, 561. It's not off the table. If the way is not higher, we can't hold 590 for this like daily trigger, hourly trigger cross right here. If this doesn't hold, that means the way is lower. And personally, I think it's 561. 560, I'll be counting out for you right here. It's 5. Be those that argue it's like 581 or something like that, but I think it ultimately resolves to way lower, like 60, way down here, 61 and 62. That's what I would like to see. I'd like to see all of this sold down here to 61, 62. I don't know if I'll get my dream of that, though. I don't think I get it right now. I think 90 is like, or 90 is nice. Maybe return to 85. I think that's asking a lot. Where is that? Yeah, 85, 94 would be the logical place. 585, 94 would be the logical place. or statistical place where you should go. So I got our first tag right here, and you're going to be looking for more of that downside to come. Man, I'm looking at all this stuff, and I'm like, you start counting the months up of 26, and it's like, it doesn't look good for bulls. Not necessarily today. So don't take what I'm drawing out here in the background as being impactful to like this week, next week. But like you start getting into like spring lows, summer lows, fall rolls around in 26. And if they get deep enough, if we start selling, right? So you start seeing like bad weeks, bad months, bad quarters, right? Start to see a bad month, and you see a bad Q1, a bad Q2 closing price, not the highs of those quarters, right? So like even though you make it a high in Q1 or a high in Q2, you start to put together bad months and quarters. Like the closing months and closing quarters for 2025 are going to be important. So like when you're looking at the closing price every month, you come into OPEX and end of month every month this year, come into the end of quarter, don't be paying attention to like where the price of SPY is in the middle of the month, early month, beginning of the month, middle of the month. Be paying attention to the closing price of SPY on the monthly and quarterlies. You'll get that divergence from now into like, let's call it fall. And I don't, does anybody look at C26 or 27 as good? I see it as really bad. So you want to be paying very close attention right now, specifically to the closing price on month and quarter for 2025. It's going to matter. And you start stacking up like a monthly low, quarterly low. It doesn't have to be like, you can still get highs in those time frames, new highs in the market. But you start putting together like a bad month, bad quarter. And that's the introduction of volatility, right? You have like that introduction of volatility into 2025. That shit counts. Like, like that price will matter this year. If you had a mantra for this year, and you want to know if we're going to squeeze up to 7,500 and trade the 95 to 2,000 trade, or if we're going to trade the slow realization trade, that 26 and 27 are going to be fucking shit shows. You want to track this year, in particular, monthly closing prices to prior month and quarterly closing prices. Start stacking them up. They're going to matter. My crystal ball says what based on what the fuck? Are you like brand new here or something? You got to be brand new here, free. You got to be a free user and brand new. I'm going to assign you, rename that guy to brand new free member. Wouldn't unemployment ticking up be good? Allows more cuts? No. Unemployment, velocity and unemployment is bad. Velocity and unemployment would be really bad. And then, of course, touching 2% inflation and then ripping velocity and inflation would be bad too. Right, Winky? It's got to be, right, Winky? 100%, brother. No, you can get like, so you're kind of wrong on the cut stuff too. Hold on, we'll look at that together right now. Didn't I show you guys this all the time? Like 95, 96, 97, 98, they did massive rate increases, paused, they cut, then they raised. They can finagle it where the market can squeeze higher. We can enter like the bubble trade. We're already in the bubble trade right now. We're in the soft landing right now. We're in the bubble trade right now. But you don't know. We don't know what policy is. There's unknowns, right? There's things we don't know. It's things that Wall Street doesn't know. They're definitely setting it up. They're setting it up for the squeeze. They're setting it up for the roll. They're doing both right now. My assumption would be that they're going to deleverage this whole year, and not care where price goes. If I was an institution, that's what I would be thinking. Unemployment is the key. If there was one data point that is the biggest key, it's always unemployment, employment, and unemployment, because the drivers for GDP, everything. I mean, you look at GDP, you look at debt to income or GDP to debt ratios, the yield curve. They're all secondary to unemployment. And you can run an economy hot with high inflation if wages follow. It'll be violent, but it'll be up. GDP would stay up too. Oh boy, but that like the looking out to the end of this year, when the fucking door gets closed right on a bull, and you won't even know it. Oh, you got that from me? Yeah, unemployment is probably the biggest. Like everyone likes to look at like inverted yield curve and stuff. It's a bigger pile to look at. There's a bunch of smaller numbers together with all this stuff that matter too. There is more that matters, but if you were like, hey, I got to look at one thing, dumb trader, it's probably unemployment. You had to be like a dumb trader. That's probably the one. Tell you the best, give you the best barometer of the economy, the business cycle, and in kind the stock market, stank market. Do we get more selling into the close here today? What time is it right now? It's are we already at 3:00? Jesus Christ, I'm late. All right, let's talk about expectations from here for planning for tomorrow. One quick second here. 1530, 1600. I swear to God. I know, Winky. I'm looking at it and I'm like, oh. I'm like, blah. You like they're closing the door. Like whether we squeeze up, or whether we begin the staircase down, that fucking door is being closed, and I'm like, every time I see it, I hate seeing it. It's there. I hate bear markets. I don't fucking like them. I hate going through like every bear market. I'm like, oh God, I got to deal with these fuckers for fucking a year and a half. It's going to be gross. 3 years. All the diarrhea. How do you live? Like, how do you live with yourself? Every time I shouldn't say this because I love bears, and I get that you're happier in that state of being. Like, how do you live a full life? Oh, you think I'm a bear? I think half this crowd doesn't know me. I gotta say, like half of this crowd people chatting in this audience probably doesn't know me. Let's start at page 1. I am okay. So I like to call tops and bottoms pretty well, I might add, and I don't mind stroking my ego in that. I'll do it all day long with you. Do a pretty good job at it. I am a bull. I am a perpetual perma bull. I want you to know that. I've been all things. I've been degen. I've been a fucking crypto trader. I've been stock trader, options trader, you name it. Futures, fucking wheel, fucking selling options, own the stock market, you name it. I'm a bull. I will always be a bull. I believe in buying major dips and owning this market forever. This is the United States of fucking America. So we'll clear the air here. Am I a bull or a bear? I'm a bull. But I understand that there's that the market goes up and comes down. There's accumulation and distribution. Prices are fake. All good things do come to an end. So I'm a bull. I've been a bear. I've lost a lot of money as a bear too. It's always better to have money to deploy. And there's a lot of bulls out there that want that pullback too. There's a lot of bulls that are like me saying, 25. We said, I think we said the top was January. Last year we said January 2025 is the top. But I don't know if I believe that anymore. We get an extension of life. But it's going to be short-lived, and mostly because of Trump. If it had been Harris, I would say that top is in. But the other thing too is velocity is saying, it's going to be a process. So velocity and higher frames is what I trust the most, and that takes time. It's like bear horizon and my horizon as a bull are different, right? I want new highs right now. Bears like want crash tomorrow, right? I don't see that right now. And the future's unclear with how we can extend this. If we can whore this shit out through the spring and summer, or if we get more volatility, but we're able to recover and keep doing this like topping thing, right? Like we did in the 90s. I just don't know is it possible to do it again? Is it possible to do a repeat of the 90s? Overvaluation, and the Fed really matters in this. I'm going to be honest. Like, it's not just the Fed. Policy matters a lot in this. From the presidency, the Senate, the House to some extent, helping Trump with his policy, and then the Fed and the Treasury Department matter a lot here too, more than you think. I don't think institutions matter. They do, I guess, but they can force a matter. Bond market can force the matter. But institutions are wrong all the time. Banks are wrong all the time. Even if they want this to happen, like they don't want to squeeze it to the moon, they can get fucked and be wrong. I'm not beholden to them at all. But they're still setting it up. Even if it goes up there, they're like, fuck you, we're out of here. They're doing it right now. They're starting. But God, having to go through the bear market in 26, 27 is going to suck. I fucking hate going through bear markets with bears. They get so fucking crazy. We're going down to 1,600 cap. I'm like, no, we're not. We're going to do $160 on S&P 500. I'm like, dude, we're not doing that. We're going into depression, bro. The gig is up. The United States is a farce. Bring on the yuan. The dollar has been debased. Look at gold. Gold's actually more of a sign of a war, right? Gold doesn't really help at all when it comes to markets going down. They're more a sign of impending war. Yeah, USA has overshut it down. I know. There's you can see that they're saying that. They're saying at least war. War is coming. I do believe that war is coming. We need a new generation of we need a new greatest generation, don't we? We need a good old World War I and a good old World War II. Try those again. We'll keep them conventional this time. No, I don't think gold to me has ever been or not recent memory. Gold to me, accumulation of gold to me is war. Ability to fight war. Not bank problems. Gold is not bank currency, it's nation state currency. In my view, at least. This green one's still green right now, but for all intents and purposes, this was the buy the dip down here. This is where the sellers were, right? Bulls could not hold this, right? Down below that gamma now. This is being turned into sellers right here. So you can see that turning into sellers. This one's turning into sellers on an hourly basis. On a daily basis, we're losing the day here, right? Not good on a Monday. Let's go to the trigger screen. So we're losing the daily basis here. This is the Monday at 4 a.m. You see this down here. Monday, 4 a.m. Squeeze higher. Cash market, 9:30. Right here. It's cash market trade. We're below it now. Over here. So all this price action here is light trading. So this is we're going to go down here and sweep all this stuff up down below here. See this? 4 a.m. Right there, 4 a.m. All right. So we'll start taking all this out. That's 4 p.m. Leave that right there. We'll give them more time. Take all this out right here. And we've got reports coming out in the morning. Expectation of bad news on jolts. That would be a bear expectation. $5.85. And you get this out before the minutes. Get the volatility before we get to the minutes on Wednesday. Trigger pivots. Hourly basis. Let's just get rid of all this so you have an expectation. Expectations into tomorrow, Tuesday, and Wednesday's minutes here. Bulls holding on by a string right now on the daily trigger. What I want to show you here is when we lose the back test of the hourly trigger. I want to show you where we lose the back test. We lose the back test, bloodbath, right? Lose the back test to the hourly trigger here, bloodbath, right? Coming back right now in a squeeze to retest the hourly trigger. If the hourly trigger is lost, let's draw this right here. This is your daily instigation here. We just talked about that, right? Daily buyers coming in this morning, squeezing it up, right? Monday, squeeze. Market begins to lose support in here if it does, right? So you can handle this here. You can handle that. That's all fine and good. Rock and roll, check marks. Way is still higher, believe it or not. If this is lost here, though, the move is to the downside. Velocity is still negative here on a 30-minute basis. Hourly velocity does not look good. Daily velocity is neutral right now. You're not getting the close, though, today in the green. That's negative for a weekly start. This hourly looks kind of sketchy, doesn't it? Like it wants to come down just a little bit more. So this is a weekly bar chart here, right? This is today. Sellers coming in, right? On Monday. This is last week's candle here. If this is lost, auto trade right here. Minimum. 61 is down here on a weekly basis. This would be shit show. Wick this would look like it would look something like this. You get down there, right? A little bit more ugly right there. Quick wick down. Up and away. Worst case scenario, 15% chance. Trade to right here, 30% chance. Maybe even 45 at this point. Starting the new week right now, right? I'll assign this with like a... right now it's still like 15 to 20% chance. But if we break below this this right here, this weekly candle, it becomes like a 45% chance. Right there. Take out these lows down here. Bull still on this. Well, that daily still looks good here. Bull still on this. Arlie Velo says we can recover. Let me check 4R in here. Tomorrow we get 2 reports. So in the morning tomorrow, we're getting 10 a.m. ISM PMI services and JOLTS at 10 a.m. tomorrow. 1600. Squeeze this up. They're going to try to take this down. Tomorrow's reports are going to matter. So you get Tuesday reports at 10 a.m. Let's look at that. Tuesday, 10 a.m. Wednesday, 2 p.m. minutes. Right there. Whoop. That. JOLTS ISM services are going to matter. If they're good, we can erase this. But if they're bad, bloodbathing this shit down. You'll probably see something more like, you gotta even be careful of watching if that report is like okay, but there's no squeeze. You know, something like this, and then back into the depths of hell tomorrow. Oh, wait a minute. And this would be Tuesday all day long. Nope. 1600. Yeah. Some kind of like, I might have this wrong. Hold on here. Recover. Yeah, pin you in right there. Bad news, Powell, and then lift you up. Not only that, but you've got, don't forget that you've got NFP, non-farm payroll unemployment here on Friday. So like even if it's a good read, all right, they drown you down here, murder all these calls and options in here, and take your head out by Friday, Monday. Cut from drowning up down somewhere down here. Now, not only that, but if you get a bad NFP, that's how you'll get your 62. Bad unemployment, bad NFP, any of that kind of stuff in there, plunge down, wick up. Right there. Get this like 4 p.m. up here. Everything's great, man. Wasn't so bad. Come in a Thursday. Oh my God, we got NFP. Fuck you. You're all drinking the Kool-Aid in here. Slam you down into Friday. Fucking bears are like, I love it. So for right now, don't think about that stuff for the rest of the week. Not quite yet. We're not there yet. You've got a report coming out tomorrow. On a daily basis, it's holding up. So the bulls still have the day. They're right here. You can see the bull. This is the week. Bulls still own the week, even with this push higher. Bulls still own all this. So you're going to be hemmed in here into the close and awaiting the reports that are coming out tomorrow into 6 p.m. So for right now, that's what we're looking for. Some kind of a break below. Close all this garbage up right here. I'll put it right there to 592. So that's an expectation tomorrow, 592, and a low by like 4 a.m. or not 10 a.m. or something like that. Pin you in, capture the volatility before we ever get to the report, right? And then you'll get a breather again if the report is good. Bring you back in again for the report or for the minutes from the Fed. We already know the Fed's probably going to be a little more hawkish in tone in those minutes, whatever was discussed behind the scenes. Then you got one more big volatility day on Friday. So just drown a bull, and drown a bull again. Now, if all of these reports are good, or each time before we get to these reports, you'll see the hedge come off the market. They won't actually hold through the report, just into each report. And so we have the ability to squeeze at any time when the actual report comes out. So here's your volatility for tomorrow's reports. They don't care if we go up or not, or squeeze off the report or not. They got what they did, what they needed to do. For today, it's a pretty good day for bears, right? Our bulls had a good day, but then they drew it all back down. So expectations into tomorrow and the rest of the week, a minimum trade to 81, possibly 61 on a wick by Friday. Now, there's something to be said here. There's something to be said. There's a light at the end of the tunnel here for bulls. If we hold this back test of the hourly trigger, right, which we have not done, whenever we do that, we escape. So let me just show you an example right here. A downside move, right? If we're coming up in here right now, right? Come up here. If we hold that hourly trigger, we will squeeze in a big way. So right now we are testing that same area, aren't we? We're testing the hourly trigger right now. If this holds, squeezing is in our future. So if you're a bear, you want to, in cash market, like hold us on the hourly trigger, get us underneath the hourly trigger for more down. If you can't do that, if you can't get us under with, reports tomorrow and minutes on Wednesday and NFP and unemployment and all that other fucking shit, if you can't get us underneath, we're squeezing. And we are going to trade 604 at minimum, 607 likely by Friday. So you have some chances here. You get a chance on the open or on Tuesday's stuff. You get another chance again on Wednesday's stuff at 2. All right, you're getting a chance here to send us underneath. Your book, though, goes away as the week progresses. You got to get bad reports tomorrow. You got to get a bad doom and gloom Jerome Powell. You need to get bad news on Friday as they set this rug pull up for bulls. Now, the more they don't do that, right, start getting good reports this week. You can't get price underneath this 594. You might get 90 at best. They will crank this bad boy to the moon. Now, if you want to know what I think about this, or my personal take on where the week winds up, I don't think that it's going down. I'm bulled up here, and I'm positioned for this up move. I'm positioned today. I got 0 dates today, and then I've got, but they were cheap. They were lottos. But then I've got a major position in the market for January 17th. And my question here becomes, if we lose this, I always like to put it like this. Like, the way is higher, right? That's the high. We took this low and they said, nope, the way is higher. And if that's the case and we're being told, nope, no, it's not up, it's down, sorry, bro, then that would mean it's much lower. Much, much, much lower. And I don't know if the market's ready for that. Is the market ready for 61? I don't think so. Maybe it is. We're gonna get started early. You do 61, you might as well take out 50. Expectations for tomorrow. Pump in the overnight. Neutral sideways in the overnight. Pump. Neutral sideways overnight. Sell the AM. Await the news at 10 a.m. And we'll go from there to find out if we're going higher or not, or just sideways grind until all of this volatility leaves the market. So right now, kind of bared up in it tomorrow. My thesis is the way is higher and that these bears are out of their fucking skulls. Go back to a 1-minute basis. We'll watch this into the close. The good news is there's squeezing here. You get good reports in the morning. Moon. So either somebody knows we're getting bad reports, or they're just going to be selling early because they know all the reports are going to be good this week. Get it as deep as they possibly can. You got, I'll say it one more time. You got ISM Services PMI, 10 a.m. tomorrow. You've got Jolts, 10 a.m. tomorrow. We are in positive gamma still, I think. Yeah, we're still in positive gamma, but we're slightly in positive gamma. So this means that dealers are neutral here. They don't have to buy the market. They don't have to sell the market. They don't have to do anything. So I wouldn't expect much from dealers in the overnight. Come back in the cash market in the morning, lightly traded market. You can sell this down a little bit more in pre-market and get a new low, get like 90 or something like that. And if the reports are good, we'll squeeze. If the reports are bad, though, we will slip into negative gamma, and it's what is that? Elevator down. And we got 3 of these planks this week. Three planks for bulls to walk this week. And 2 p.m. on Wednesday are the minutes. And then on Friday at 8:30 in the morning. Where's Friday? Tuesday, Wednesday. Oh, wait, we're closed on Thursday. Don't forget that. And then Friday, we've got non-farm payrolls and unemployment. Should be fun. Oh, sorry, Fubu. Yeah, let's talk about Fubu. We'll talk about Temu too. Temu's been on my list. Apologize, I meant to talk about Fubu this morning. Give me one quick second here. China. Bond yields are hitting fresh lows. Their 10-year yield in China is hitting fresh lows. Officials plan economic measures, including cutting a key interest rate and issuing ultra-long bonds to subsidize consumer trade-ins, targeting increased consumption. Tensions remain as China adds 28 U.S. companies like Boeing Defense, Space, and Security. Also, Biden has blocked Nippon Steel's attempt to acquire U.S. steel. So we got some like Asia news, some China news in here. We're going to take a look at, what are we going to take a look at? We're going to take a look at, we also have Japan's 10-year government bond, the USD JPY, was the most sold in December, if you guys know that. It's highest level since 1.212 since July 2011, while Chinese yields continue to compress at 1.61%. BFJ Governor Ueda reiterated that rates will increase if the economy continues to improve. While over in China, press reports are circulating that the PBOC has the toolkit necessary to respond to the yuan's weakness. Let's take a look at. I want to look at Temu first, in particular, because this is my own interest here. Sorry about that, but we're going to look at Fubu here in just a moment. Is it Temu? TEM, right? Is it TEM for Temu? I always forget. No, it's not Tempest. Is it TIM? I always forget. All right, we'll just look at Fubo. I know you want Fubo. You want Fubo TV. You don't want Timo. No Baba. No Timu. You want Fubu. Ugh. Fubu. Don't want to look at Fubu. Fubo TV. Sell it. Sell Fubo. Sell the fuck out of it. Do I want to keep Fubo? No, I can't talk about it. It was trading $1.50. No. No. I thought I thwarted that question twice today. Market cap's too small for me. No. No. M&A, no. It's PDD, right? Is it PDD? Thank you. PDD? That's the one that I want to talk about. I'm getting alerts on it right now. No, I'm not talking about Fubo. Nothing under $150 million market cap that squeezes in a day. I can't legally do that. I can get in trouble. No Fubo. I tried to dissuade you twice. Historic Disney deal and M&As. Why do I say sell? Do you want to know why I say sell? Here, I'm going to bring this up for you. Do you know why I say sell? You probably don't know why. Let me see if I can bring this up and show you why. Hold on here. Let me show you why. In just a quick second here, I'll show you why. Give me one quick second here. Oh, hold on here. I want to show them real good foods. Thank you, Stretching Walls. I want to talk to them about, I was going to bring it up right now, but I'm not going to because it's finally getting annihilated yet again. Real Good Foods was a trade that we were in. How long were we in that trade for? How long were we in Real Good Foods for? Does anybody know? Anybody remember how bad that got? Yeah, we were in that trade for a year. And like the Real Good Foods was like a get out of Dodge trade. Yeah, it was too long. We were in that trade. We wanted to be out of that trade in end of Q1 2020. Oh, it did really well. Yeah, but it was in like I'm looking at Fubu saying the same thing. Like you sell, you get out, take your money and you run, and don't talk about it again. SPY trading down right now to the daily trigger, trading 593.70, looking kind of bearish. Looking for 590 tomorrow on the open. Also looking for 581 on SPY, possibly 61 by Friday morning low. Yeah, that's my take on Fubu. You sell it and get out. It's under $150 million market cap. Squeezes up to $6-7. Take the money and run. Especially if you're trapped in it, like I was in RGF. That sucked. No, that wasn't fun. SPY squeezing again, 594.45. Where is, what do I got there? PDD? Hold on a second here. RGF. Whew. Do you want to see what happens when you don't take the money and run? $6. $1.18. And that's RGF. I'm not long RGF anymore. Not long anymore at all. Yeah, I'm not talking about. I can't talk about stocks that trade like. I just got eaten alive for like 9 straight months, 12 months on a trade. You're hoping for the pump tomorrow? I think they're going to make any excuse they can to get it down, Grubster. I think the reports are on your side. I think the reports are good. I think tomorrow's reports are good. You guys want my take on reports? I think that the 2 reports tomorrow are good. I think that the Fed, I think the Fed minutes are dangerous to bulls. But if we can get down low enough, it's not going to matter. Price will matter in that. I think the unemployment rate and non-farm payroll is going to be good. Give me one quick second. One quick second here. I had to take some antacid pills. Still haven't had any lunch yet. Time to be right back. Old man, time to be right back. Now looking at tomorrow. 22 cents for 600s. Trying to figure out if I'm going to buy some 0 dates into this close. $624. I'm not really moving a lot right now. That's more than I want to spend. $2,400 fucking dollars for. Like, I like the idea of $700 or $600 4 times. I'm looking to see if there's like any more down in the after hours here. Maybe they can, like 2 weeks ago, I bought a close on a report. I bought a close at like 4:14 in the afternoon, and we squoze, and they still repriced those options. I didn't make anything. I made like 10%. We went up like $2, $3. Didn't matter. After hours have not been producing a lot. Like after hours overnight holds, like repricing inside of after hours. Mm-mm. No trade for me. 22 cents right now. 600 Cs for tomorrow. I'd take them I'll buy them for 12 cents. 16, 14, somewhere in there. I'd buy those. Okay. Closing on trend. Look out for these overnight or after hours selling. We should go up here into at least up here into like 596, 596.33 by 9 p.m. or so. Watch what happens at 9 p.m. for futures traders, Globex, and then be watching at 2 a.m. See if the sellers come back in at 2 a.m. to sell us down into the open tomorrow. For the news in the morning. Expect from now into 9 p.m. 596.20. Squeezing higher now. I can't take this trade with cash market though. We're squeezing right now. Can't take this fucking trade with this 10 a.m. bullshit down here. Can't take the trade in good conscience. Not for the price. SPY squeezing up into the close, trading 595.75. Get rid of that so we can see it. That's 15. Can't take the trade. I don't want to wake up to a bloodbath in cash or at 8:30 in the morning. Yeah, you guys have a great day. I'll see you guys tomorrow at 9:30 in the morning. I'll have a brief out for you tonight, and we'll put a bunch of that stuff in that brief for you from like the COTs, CTAs, some of that kind of stuff. Just note we do have danger tomorrow morning. Unknown reports at 10 a.m. Jolts and ISM services. I do expect those reports to be good. I'm not expecting either of those reports to be negative. So I'll see you guys tomorrow.